This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Donald Trump needs a weak dollar.
I don't hear too many bullish cases for China in 2025.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Trump took steps on everything from TikTok to the southern border.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. Lots of news coming up. Jim Bianco with us, Anastasia Amoroso in the 8 o'clock hour. Nvidia at what, 4 p.m.-ish?
Yeah, and so it's going to be...
Carol and Tim will have that?
Absolutely. They're going to break it all down.
Well, we'll have to see. Nvidia out today. I guess it's a big deal. I still don't understand it. Mandeep Singh will be along.
He'll explain it to us.
To explain, at least to me. What's going on? Good morning on your commute across the nation. Particularly good morning if you're driving a car from Generous Motors. You know, I look at the 10-year track record, a blistering 5.6% total return. But they're on the edge of Apple Computer with the share buyback.
Yeah, exactly. I mean, GM buying back stock, boosting a quarterly dividend. I don't know, Tom. I mean, I look at that. I look at the whole industry. It's a very tough place to invest because you just don't know where this EV market is going, how it's going to develop, how you're going to get to profitability, how is it going to impact your existing business.
Just the CapEx number.
Sure.
David Welch in Detroit, of course, expert on this. The key paragraph, folks. $6 billion in buybacks in June. They've already spent $5.7 billion of that buying back stock. There was a previous $10 billion buyback 2 years ago, say. All told, they've done $37.7 billion in buybacks. But they're not Apple Computer.
No.
That's what they don't get.
And I'm looking at the stock here. Year to date, the stock is down. I mean, it's down 12% year to date.
Well, we'll get some experts in on this. That's what we do here, folks. We don't opine for you. We try to have conversation with top people. Rich Greenfield on Paul Sweeney's Media. Looking forward to that in the 9 o'clock hour. From the Interactive Broker Studios, the futures up 25. The Bloomberg Business Flash, Lisa Mateo.
Yeah, and Nvidia is certainly going to test the market steadiness later this afternoon. That's a big focus for investors. It's next generation Blackwell chip. Nvidia shares up about 2%. Let's go to NASDAQ futures up 0.6%, 133 points. We go to S&P futures up 0.4%, 25 points, and Dow futures up 0.2% or 117 points. The 2-year yield 4.12%, up 2 basis points, and the yield on the 10-year 4.31%, up 1 basis point. To commodities, I actually have to point out copper. It is surging up 3.5%. President Trump ordered the Commerce Department to look into possible import tariffs on the metal. So right now, it's at $464 per pound. We go to the Bloomberg Dollar Spot Index, up 0.2%. Consumers, they're starting to spend more on big ticket purchases. That's the word from Lowe's. Shares of Lowe's up more than 3%. That's the home improvement store. It forecasts sales to rise, although it was a little bit slightly below estimates. We also have shares of the world's largest brewer. We're talking about Anheuser-Busch InBev. Surged the most in 3 years, up 7%. Earnings beat, but yeah, you think Bud, but it's strong sales in Michelob Ultra and also Busch Light. That is your Bloomberg Business Flash.
Michelob
do they serve
Ultra?
that in the bars in Brooklyn that you went to?
They do. Well, maybe. I don't know. I mean, they were drinking... I didn't know what their kids were drinking out there.
Is that the beverage of your choice in God's basement?
No, it's a Bud in a can. So if you come to the Sweeney compound on the Jersey Shore, the house, it is Budweiser in cans. So my friends know when they come over to bring their own beer because otherwise they're drinking Budweiser in cans.
You're not doing Miller High Life.
No.
We were talking the other day.
Exactly.
Kids are having Miller
good for
High
them.
Life. Joining us from the land of Schlitz and Pabst Blue Ribbon, Jim Bianco, I believe, is with us right now. Rich, do we have Mr. Bianco? Okay, we do. Thank you, Rich Truman, for that this morning. Jim Bianco is nailed the sticky inflation call. We get an update. Jim, like good news this morning, futures up 25. We're getting knocked around here in immense emotional volatility. What is the Bianco view on inflation?
That it's still sticky and that you're starting to see signs that even people are starting to become nervous about it. The surveys like Michigan and the Conference Board are showing that people are expecting even higher levels of inflation. The Fed might call that being a bit unanchored. And I think that it's going to, stay with us and be a problem. Now that I've said that, it's a 3%, 3.5% problem. It is not an 8, 10, or Zimbabwe problem. But even still, a 3.5% problem means that interest rates, even though the bond market has rallied down to 4.3, we don't have a whole lot more on the downside to go if we've got that kind of sticky inflation.
How will the Fed adapt to our new, I love this phrase, fiscal space? How does the Fed adapt to, forget about the legislation overnight and the ramifications of X numbers of zillions of dollars of debt added on. Where we are now, how do they adapt to our fiscal policy?
Well, I'll answer the question by saying I hope they adapt, because their attitude right now has been, well, we have to wait and see, and we have to sit on our hands and see what happens with tariffs and see what happens with the budget, and then kind of assess it from there. And that's why the market doesn't expect the Fed to move until June at the earliest at this point. So I think the Fed is going to have to learn to adjust that there is a plan out there by this administration, and it isn't just a bunch of disconnected things like, tariffs or a sovereign wealth fund or demanding that Europe pay for more security so that we could relieve our own defense budget. It's what I've been talking about for the last couple of weeks. It's the Mar-A-Lago plan. That is the plan. And we're getting all the phases of that plan. And the idea is to lower the value of the dollar, is to bring the U.S. into a more competitive position, is to relieve us of the debt burden and bring down interest rates. But right now, the Fed seems to think like there's kind of three random things that are happening side by side and hasn't put that together. Once they do, hopefully they'll understand the plan.
So it's interesting, Jim, Torsten Slok over at Apollo is out with a note this morning and just kind of talking about the reverse of globalization. He calls it segmentation, and talking about how that puts structural upward pressure on inflation, goods, inflation in labor, keeping interest rates structurally higher for longer. How do you think about that? Is that something that could be a real headwind for global economy?
Oh, I think it is a headwind for the global economy, and it will be for both that and inflation. Torsten's right about that. It will put upward pressure on inflation. And if you look at the global economy, especially if you look at the European economy, they're not doing very well right now. The Chinese economy is not doing well at all right now. The bright spot in the globe is the United States. At least at the top line, the United States economy is stronger than most of the other developed countries, and it continues to do well. But that segmentation, or that deglobalization, as it was called before that, that's been underway now pretty much since the financial crisis and got accelerated post-COVID. Yeah. And I suspect we're going to continue to see that happen. That's the impetus behind tariffs and why President Trump keeps talking about we have unfair deals, is that he's trying to correct that. But that means we're going to see more segmentation.
Jim Bianco, we've had a series of conversations. If you're just joining us, James Bianco with us from Chicago. Thrilled he could be with us with Jim Bianco Research. Jim, I look at the last couple days of conversations, and a lot of people are, but we're cautious, and it's the politics and all that. A headline out 3 minutes ago: Elon Musk will attend Trump cabinet meeting today. That according to Fox News. Jim Bianco, how do you participate in the market, in the stock market, given the news flow we're all having right now?
Well, that is the thing you want to definitely get yourself, away from, is getting bogged down into all of these situations, whether, there's this or that's happening, or even the Mar-A-Lago Accord. I think you'd want to take a longer term perspective and to decide what you like, what you don't like. Now that I've said that, I'll give a note of caution. The other problem that the stock market has, while I think it's having indigestion more than anything else, is we started the year with very high valuations in the market, and the Mag 7 stocks had extremely high valuations. They need everything to go right when you have those kind of valuations. To put it into, in baseball terms, you need to score 8 runs. And if you score 6 runs, that's not enough, even though 6 runs sounds like a lot, because that's the problem when you have high valuation. And that, I think, is why we're starting to see people be more cautious more than anything else, is those type of issues. And it gets kind of wrapped up into, the news flow of the day.
Jim, we're about 90% of the way through the S&P 500 reporting season here. Obviously, Nvidia, big name after the close. What have you learned from the earnings?
Yeah, Nvidia is the biggest name, but the earnings numbers have looked great so far. The year-over-year earnings numbers for the fourth quarter to fourth quarter for the S&P 500 is running around 12 or 13%. That's been a very good number. Even sales, which is kind of analogous to nominal GDP because they're like trillions of dollars of sales,
Agreed.
is 5.5%. And so these numbers have been looking very good. Now that I've said that, remember that those are the numbers they reported. They don't have much forward guidance, but even the companies are offering guidance that is somewhat positive right now. So that is a good thing, but that is also running into that high valuation thing. So even though those numbers might be good, they might not be good enough.
Jim, Mandeep Singh's coming up here. We got to go to him, but Mandeep wants to know, can the White Sox improve one game on last year's train wreck?
You know, they haven't won a game in the Cactus League. They're the only team that's still winless in the Cactus League. So the answer is
News
no.
you could use.
Okay.
Boy.
There's news you could use nationwide this morning from Chicago. Jim Bianco, way too early from Jim Bianco. Thank you so much for joining us. Mandeep Singh's going, what did I step into? Joining us now with Bloomberg Intelligence with real ability. Mandeep, let's go back to square one. For all of our listeners and viewers, including me, why is Nvidia different?
Well, I mean, when you look at, the big transformation we are talking about when it comes to generative AI, Nvidia is at the forefront of it all. I mean, we have seen an exponential increase in computing requirements because of AI, and Nvidia has the leading chip, and by far the leading chip, when you think about what companies need to train their models, deploy their models. So and look what they have achieved in terms of data center revenue. The hypergrowth phase is continuing. I mean, even this quarter, a consensus is expecting 60% revenue growth in the data center segment. So this is phenomenal when you think that the data center revenue run rate is close to $125 billion now.
So, Mandeep, what is the biggest question that you think Wall Street will have when they listen into this conference call today?
I mean, it has to be related to DeepSeek and the scaling laws and whether companies need as much compute for training as they did prior to the release of the DeepSeek model. Everyone still believes in AI. We heard about the Jevons paradox and how, lower prices will boost demand and, usage of compute. All that is great, but ultimately, this market was driven by, compute growing for training these models. There were talks about building a 1 million GPU cluster, and whether that still holds true or not in the near term, that is the question you want to know from Jensen tonight.
So, again, I'm just looking at the stock. That's kind of what I do first thing when I look at a story, and it's down 5% year to date. So the momentum, at least the short-term momentum, is out of this stock right here. What do they need to do to kind of reinvigorate the near-term momentum in the stock, do you think?
I mean, just tell the street that they believe, they can continue to grow at this 60-65% growth, at least for the next 4 quarters. And 2026 numbers, it's too early to guide on that. But if we get that, confirmation that this year is going to be a 60 to 70% growth year when it comes to the data center side without any air pockets or digestion period. I think that'll be quite convincing.
Mandeep, I'm looking at the DES screen in the Bloomberg. Folks, the core of the Bloomberg equity analysis is the FA screen, financial analysis, which is basically bringing FactSet into the computer, if you will. And the other is the DES screen. Are these stocks under-owned, Mandeep Singh? I look at consumer stocks, 70, 80, even 90% institutional ownership. That's not true of Apple. That's not true of Nvidia. Are they under-owned?
I would say, when you look at the overall Mag 7, probably at this point, they are slightly under-owned. And a lot of the folks miss that, valuation multiple expansion in the last 2 years. Nobody really grasps the extent of how this AI wave would turn out to be. And the valuation multiples did run up very quickly. So I would agree with that assessment that they are under-owned. But with that being said, expectations have gone up a lot. And so when you think about a stock like Nvidia, growing 60% plus and sustaining that is not very easy, given we know it's a chip company, it is cyclical. So there are always those kind of doubts that are out there.
I think this is incredibly important, Paul. There's this assumption that everybody owns Apple up to their eyeballs, and it's just not true.
Yeah, I mean,
it's just not. It's not factually correct.
Yeah,
when you look at the Bloomberg,
and you look at the Bloomberg terminal and look at the ownership, and so for Nvidia and just AI, Mandeep, where are we in the arc of the AI investment? Is it a
good question?
Are we still in the early stages, and I just want to throw money after it, or are we somewhere further along?
Are we in the first or second inning with the Chicago White Sox, where we have a chance?
Yeah, I'm not going to use the innings analogy, but I would say, we are still very early when it comes to this large addressable market, and we sized it ourselves at $1.6 trillion by 2032. Well, guess what? If that's correct, we are talking about a 40% CAGR from this point on, because the market size is still close to 200 billion based on our estimate.
One final question: why can't Microsoft get out of its way?
Well, I mean, look, Microsoft is the enterprise software where you deploy all of this AI. There is that consumer side that ChatGPT has penetrated quite well, and it's quite disrupted. But when it comes to the enterprise side, this is your distribution channel, and you just can't, find another distribution channel to deploy AI than Microsoft. So I do think they are integral to this AI wave.
Mandeep Singh, thank you so much with Bloomberg Intelligence. Paul, I didn't know this. Microsoft, 12-month total return, down 1.6%.
Yep.
Negative.
Yep. But then you use the Matt Miller comp function, COMP, and it shows you over the last 5 years what the stock has done. It's compounded about 20% per year for the last 5 years. The S&P 500 about 15%.
Are we using enough terminal functions this morning?
We're trying. We're trying to.
Michael Barr in a terminal is an act of God.
Exactly.
I mean,
especially if I had, with me,
You go Lions go, right?
Yeah,
that's what it is. With our news in New York City with Lions go. Michael Barr.
Thank you very much, Tom, Paul, Lisa. House Republicans have muscled their budget blueprint to passage with a push from President Donald Trump. The vote late last evening is a crucial step toward delivering what he called his big, beautiful bill, with a $4.5 trillion tax break and $2 trillion in spending cuts. Bloomberg Government's Jack Fitzpatrick has more.
This was a very close vote. It's effectively an extremely important procedural vote. It's important to keep in mind this is not the so-called one big beautiful bill itself. This is the framework that they needed to vote on in order to be able to pass a forthcoming bill through the Senate with a simple majority and not have to negotiate with Democrats on tax cut extensions, spending cuts, etc.
Bloomberg's Jack Fitzpatrick. President Trump will convene a meeting of his cabinet this morning, and Elon Musk will be there. Musk faces new questions about his efforts to shrink the size of the government. A Southwest Airlines passenger jet avoided a potential collision at Chicago's Midway Airport Tuesday. The plane from Omaha was starting to land when a small business jet was crossing the runway in the distance. The Southwest pilots essentially floored it and pulled up to abort the landing. The FAA says the small jet did not have clearance to be on the runway. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. I'm catching Paul unprepared here, which is my fault. No problem. But you're so damn good, you're going to be able to do this. All of a sudden, Netflix is creeping into the Mag 7 lists.
Sure.
The glory lists. Like they got it done. I mean, just the summary here is Netflix with all the, what are we going to do? And Lisa, what are you spending per month on Netflix? I mean,
it's $17.
You got 4 logins,
You remember it was 9 or something?
Oh, for Netflix, it's part of the whole, it is $17 a month. That's what I'm paying, yeah.
And I just got an email for like $23.
Yeah. See, Lisa she takes care of that entire household. Nothing gets past her. No charge, no little, streaming service gets past her.
She's tough.
She is, I know.
You gotta be.
The last decade, ready? I had no idea. 28.4% per year return.
Phenomenal.
What is it? We talk about Tim Cook. We talk about, this guy, Zavlev, struggling over at Warner Brothers, Greenfield with us later on.
Yep.
Nobody talks about the executives at Netflix.
Well,
These guys are geniuses.
They are. I mean, Reed Hastings, the chairman, co-founder, and Ted Sarandos. They are. You think about, they are Kleenex. Netflix is just streaming for people.
They're just on at my house.
They are.
They
are streaming. They own this green space, this white space, like nobody else. And it tells you something when a company like the Walt Disney Company is desperately trying to catch up, to Netflix. Right. So that just gives you a sense of how much they dominate this new entertainment field, which we call streaming.
Up 66% in the last 12 months. Wilmot Reed Hastings Jr.
Yep.
Leading the way. We ought to talk about him like we do. They only have 14,000 employees. They never would have guessed that.
No, their investor relations guy, Spencer Wang, one of the leading analysts on Wall Street, he kind of keeps the street in line, so he does a great job.
Institutional ownership is way more than Apple, 89%.
Yeah, it's a darling. And they've delivered. They've delivered for the street and investors.
Thank you, Netflix. Great summary there. From New York City, this is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures advancing. Traders moved on from concerns over weak U.S. consumer confidence. And now the focus on Nvidia earnings later this afternoon. Its shares are up more than 2%. We'll start with NASDAQ futures up 0.7%. Dow futures up 0.2%. S&P futures up 0.4%. The two-year yield, 4.12%, up 2 basis points. And the yield on the 10-year, 4.30%. That is little change. We have the Bloomberg Dollar Spot Index up about 0.2%. Tesla shares, they dropped more than 8% yesterday. That was after news that sales in Europe plunged by almost half in January. Well, that sent the net worth of Elon Musk lower by about more than $22 billion, his fourth largest one-day loss. If we check in this morning, shares on the mend, they are up about 1%. Apple, it signed a new agreement with Indonesia to invest in the country, paving the way for iPhone 16 sales to pick back up there. Its shares, though, down about 0.5%. And since we've been talking about a few Mag 7 stocks, the start of the year for them, well, it's been anything but magnificent. The Bloomberg Magnificent 7 Index, it's fallen about 10% from a December high, erasing about $1.4 trillion in value. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. This is always an important discussion we're going to have right now. But given the festivities of our political economy, our transatlantic moment, I'm going to say, okay, in the next 90 days, maybe this is the most important conversation. Andre Zuderman is chairman of the board of a company called Vontobel. It's a big deal in Europe, of course, associated for years with Allianz. And I'm just going to cut to the chase on our budget deficits, as Ruchir Sharma talks about, in the austerity of Europe. You had the privilege of studying at Leuven in Belgium with someone who's been very kind to me, Paul de Goire. And he is expert on the fiscal space of Europe, truly expert. Do we need European austerity in America? You're one of the few qualified people to answer that question.
Well, of course, the United States, it's always good to be on the program, by the way, Tom. Thanks for having me. The U.S. has, of course, the great advantage of being the reserve currency of the world holder with the U.S. dollar. Therefore, the U.S. can expect seigniorage gains over decades. That's happened. And therefore, it can run structurally a bigger deficit than Europe. Also, the demographics of Europe are worse than the U.S., and therefore, if you're going to grow more in nominal terms, you can afford a bigger deficit. That said, I mean, this is a big bet that the authorities are making, that you can cut enough costs to be able to reduce taxes enough to then grow the economy even faster than it currently is, although it's already pretty hot, isn't it? So looking at the labor market. So that's a big bet to make. And, one needs to be careful with the fiscal situation. We saw in the United Kingdom a year and a half ago,
that worked out.
That didn't work out very well, did it?
Yeah. Who are you watching more than anyone? Mr. Macron visiting with President Trump the other day. You're in Switzerland. Who does Andreas Uterman, who's the person, the politician you're focused on to see what they do?
Well, I think it's Starmer and Merz, the likely new Chancellor of Germany. Those two have it in their hands to either turn things around in Europe, in the sense of taking some of the popular concerns seriously around immigration, around inflation and so on, and trying to get the political system back into even keel. But I think it's last chance saloon. If they miss their chance in Germany and in the UK, then the next elections will have some dire outcomes for Europe, and there's a lot of potential for tension.
Andreas, you're based in Zurich. I'd love to just get your view. What are your compadres, your colleagues in Zurich? How are you viewing what's happening in the U.S. here? We have a new president, a new administration, and new policies, tariffs or economic policies that are being bandied about. How do the good folks in the banking world of Switzerland view what's happening in the U.S.?
There's clearly a lot of concern. There's a real reckoning in the sense of, okay, now we really need to grow up in Europe. We need to get our house in order. That's for sure. I think I would like us to look at this as well as an opportunity to learn, because there is a reason why this administration was elected with a popular vote majority, which hasn't happened for some time, and these lessons need to be learned, because if you're a democracy and you don't listen to your electorate, well, you get the results.
Yep. So as you sit there, Von Tobel, how do you think about investment opportunities global these days? What's changed maybe for the last few months? Where do you see the greatest opportunities?
Well, it's interesting. I think the U.S. equity market has outperformed for a very long time now, and is at very stretched valuation levels relative to its own history, but also relative to Europe, the UK in particular, being very cheap. And that's been driven largely by the inexorable rise of the Magnificent Seven, maybe to be joined soon by, I heard you earlier,
Netflix.
Right? But really, one has to ask oneself the question, how sustainable is a share of the U.S. equities in the MSCI world of near enough 75%? That's unprecedented. And historically, whenever that happened, typically followed a period of underperformance, whether that's the case for individual securities. I remember, you probably remember this, Tom, Vodafone was a very significant part of the UK equity market 20 years ago, and look where it's today. So I would say probably diversifying out of the dollar and out of U.S. assets, particularly also given the fiscal question marks in the U.S. economy, might make a lot of sense. The other thing I would do is, I think there is a big focus by policymakers on the real economy, and that would tend to favor, over time, value stocks.
Banks, a moonshot. Finally, BNP Paribas of Paris, I'm just picking on them, 30 to 70. How does the thinking change at European banks? Is this finally where we see them merge? The great David Harrow's talked about this for years. Do they finally do cross-border mergers because the share price is recovered?
I don't see it in the short term. I think the political obstacles are too significant, and the scars from the last round of this in the late 2000s, early 2010s, are still too significant. I'm not excluding one or the other. I think in the private banking segment, the one that we're in mostly, some of the smaller players finding it more and more difficult to survive due to the very onerous costs of regulation. But I think in the larger cross-border mergers, I don't really see it.
Yeah. I'm a former employee at Credit Suisse, First Boston.
That worked out.
Yeah, that worked out.
I don't know what to say. Congratulations. Okay.
And I was with First Boston Corporation before we had to put the Credit Suisse in the front of our name.
That worked out.
Yeah, that worked out. And then we bought DLJ. That worked out. What's the feeling in Switzerland these days about the merger of UBS and Credit Suisse? I know that for Swiss, that was a very difficult pill to swallow.
It's hard. It has a lot of consequences.
Yep.
Every high street has 2 branches.
Yep.
Most of them are going to have only 1 branch.
Right.
The corporate sector, the Credit Suisse and UBS were both lending across Switzerland to the corporate sector. No other institution in Switzerland does that. Now there's only UBS. 1 + 1 is not 2.
Yep.
So who's going to make up the deficit? Then there is a whole host of private wealth that needs to be reallocated because people don't want to have all their eggs in one basket, which would be UBS.
Right.
That benefits some of the players, but overall, it's been a pretty interesting 18 months.
Redo emails in. Redo, keeper of the Amex.
Sure.
Ask Andreas. At Brasserie Lip in Zurich, why is 12 escargot $47 US? Can you explain Switzerland to Redo, keeper of the Amex?
Totally. Well, Redo sounds like he's Swiss, so he should know better.
He is.
But look, I've asked exactly the same question. I find the prices staggering.
Are you Andreas, keeper of the Amex at Vontable?
It's staggering. I've been told it's a mixture of it's landlocked, so it's difficult to get food. They have very high expectations of the quality of the food they serve, and we don't expect to tip staff 20 or 25%. The waiters are paid real appropriate wages that allows them to pay 47 Swiss francs for an escargot.
There you go.
And that is the reason.
What will SNB do on this is the elite, I think of Tyler Brûlé at Monocle. Everybody's moving to Zurich. Great. But what do you do about a nation of cantons? What does SNB do? Do they just manage the franc?
They don't manage the franc. I think they're being managed by global forces. They've given that up, right? 15 years ago when they abandoned the peg. No, I think the Swiss franc is going to be strong for the foreseeable future. I've looked at a chart yesterday that showed that the US dollar rate to the Swiss franc in 1970. Tom, do you know what it was?
No idea.
1970?
1970.
I was there.
I know. That's why I'm asking
5 to
you.
1, 4 to 1.
4 to 1.
Wow.
Right.
I was
and
at
it's
the
almost
school.
1 to 1 now. Exactly.
I was at the school in Les
Exactly. So 4 to 1 to 1 to 1. And it makes sense, right? Because once again, if you're the reserve currency, it makes sense to devalue over time. That doesn't make sense for the Swiss.
Visit again, please. Andreas,
we can go there.
We go there. Bring Redo. Bring Redo with us. Lisa, you'll be pleased to know that the onion soup is popping $18 US.
$18.
At Brasserie's Lip. Thank you, Andreas Vontable. Of course, always wonderful to see him here. Futures up 29 right now. This afternoon, Carol and Tim with Nvidia from New York City, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Matei. We have NASDAQ futures leading the gains. Tech in focus. Nvidia reports later today. Analysts say its numbers could be a make or break event for the market, at least in the short term. Nvidia shares up about 2%. We go to NASDAQ futures up 0.7%. S&P futures up 0.4%, and Dow futures up 0.2%. The 2-year yield 4.11%. That's up 2 basis points, and the yield on the 10-year 4.29%, and that is little changed. More economic data out today. U.S. mortgage rates, well, they dropped to the lowest last week level this year. MBA says the contract rate on a 30-year mortgage fell to 6.88%. Later this morning, more news. We'll get a read on new home sales. Tomorrow, U.S. GDP. We go to PCE inflation on Friday. Shares of Stellantis, they're falling this morning. ADR is down more than 3%. It issued this cautious outlook for 2025. This is after its full-year profit slumped 70%. General Motors stepping up its program of buybacks. It's repurchasing $6 billion in shares, raising its dividend. Its shares are up about 4%. And BP, they're going to boost oil and gas investment to about $10 billion a year, cut CapEx spending, and boost cost savings targets. That is your Bloomberg Business Flash. Paul and Tom.
Thanks so much, Lisa. Greatly appreciate it. What a night for sports. Ovi getting it done.
Yeah.
He's like, he's 100 years old. Mike McKee and I have sat right off his shoulder in the slot where he puts a puck in the net in Washington, and he's chasing Gretzky.
Amazing. 30 goals in a season for the 19th time in his 20-year NHL career. That's consistency, I guess.
He's getting it done. I want to mention last night, Rangers Islanders, in a moment of silence for a giant, Al Trautwig. For those of you worldwide, the resonance of Al Trautwig. I loved what Tina, who works for the Rangers, I believe, had out a great thing saying he had no notes.
Yes.
It's sort of like what we do.
Yeah.
Who's the guest? What's their title? Go.
Yeah, I heard just on social media so many testaments to Al Trautwig, and he was just the voice of the Garden. That's kind of how I thought about him.
And with that, and always, our Bloomberg Sports Report is brought to you by Audi. Visit your tri-state Audi dealer today. Get behind the wheel of the Audi model you've always wanted. We thank John for the support. John was in the other day, came in with his entourage.
Did he?
Yes, Dashar came in.
Wow.
He thinks the Red Sox are resurgent.
Okay. That's good to know. They could use it.
We'll have to see as well. We'll have to see as well. Maybe they'll have a debt and deficit like the United States of America to beat the Yankees. Michael Zezas joins us right now with Morgan Stanley on this fiscal conundrum we're in. Michael, I'm wading through what I believe will be my book of the year. It's Ruchir Sharma on capitalism, and it's all on the debt and the deficit. Is now the time where we finally confront what Paul Tsongas and Pete Peterson were talking about 20 years ago?
I think you're actually in line, at least in the short term, for a lot more deficit stability as opposed to there being a real bite being taken out of the deficit level. I mean, the budget resolution that was passed last night, it basically enables an extension of current policy, right? So it enables extending current tax cuts. It does put on the table some spending cuts, potentially have to be filled in later, but it basically nets out to the same type of fiscal baseline that you had coming into the year. So I think that there being like a major sea change, I think is the question that you're asking, a major sea change in the fiscal trajectory. I don't really think that's on the table.
How can we be responsible fiscally for our grandchildren if we're talking about 14% of the federal budget?
Well, I think the Republican strategy, as they're laying it out, is this idea that you keep the tax cuts going, you improve economic growth in other areas, and you get the deficit as a percentage of GDP lower over time by having better real and nominal growth. Whether or not that works is sort of a separate question. I think if you're a bond market investor, though, you're concerned about potentially about growth and about supply factors over the next kind of 12 to 24 months. And to me, the read through and what's going on in DC is that you're still going to have some of these policy choices weighing on growth, at least in the short term. And you're not necessarily going to have the level of deficit blowout that you might have been concerned about coming into the year. So that all kind of nets to bond yields moving lower between now and the end of the year. And these longer term questions that you're talking about, which might affect the term premium, I think the can gets kicked further, and that's a discussion we'll probably still be having in a year's time or longer.
That's what we learned in school, isn't it?
Exactly.
Place toe on can.
And kick it down the road. Hey, Michael, you know, a lot of market participants are kind of numb with all the news flow coming out of Washington since the inauguration, and but a lot of the experts are saying, kind of don't worry about all that stuff, executive orders here, executive orders there. Focus on the budget. That's when the rubber meets the road. Can you give us a sense of kind of how you think the next several weeks or months are going to play out as it relates to that?
Yeah, I mean, I do think it's in months, right? So this first step in the budget resolution basically just kind of creates a shell that everyone can work inside of, that the House put forward. The Senate now has to put forward its version. They have to agree to it, and then they can start filling in the details on which tax provisions to extend, which ones to add, which ones to subtract, where they might want to do some spending cuts as an offset, identify other offsets. I mean, this is a massive negotiation across the House and the Senate and interested parties, and I think it'll take months to play out. My sense is we're not going to get a lot of really usable info other than kind of top line deficit impacts that might matter on a sectoral basis until summer at the earliest, but probably more like the fall of this year.
On your morning commute across the nation, on YouTube, subscribe to Bloomberg Podcast, growing each and every day. Michael Zezas with his Global Head Fixed Income Public Policy Research at Morgan Stanley. Paul?
Michael, what are you telling your clients, again, amid the cacophony of news flow coming out of D.C., what are you telling your clients to really focus on?
Well, in the short term, I do think you have to focus on tariffs, not necessarily the noise in the headlines, right? The headlines where you see Trump talking about, now we're going to tariff copper, and now we're going to talk about semiconductors. To me, this doesn't really represent new information. The America First trade policy that was put out when he took office on January 20th told you kind of all you need to know, which is they're undertaking this kind of massive exploration to establish authority to levy tariffs wherever they want. But that means that basically there's just one substantial multilateral negotiation going on. That could matter quite a bit, right? If none of those negotiations work out, we have penciled in tariffs continuing to go higher on China and a handful of product-based tariffs globally going on between now and the end of the year, which should weigh on growth. But if we're wrong, we're probably wrong in the sense that these tariffs could go higher than we thought and weigh on growth more in the short term. So paying attention to those catalysts, I think, is important. I don't know that it's really possible to forecast this with any accuracy, but we've got no choice but to pay very close attention.
Michael, in English, over a barbecue this weekend, someone you know, a family member, is going to say, our interest expense has grown larger than whatever. How do you respond to that?
Well, I mean, they're right. So I guess the question is, well, what practically speaking does it mean, for you? And that's going to be a question of whether or not Congress decides that those deficit costs are too high and spending needs to be cut somewhere else. And right now, what's on the table from House Republicans is cutting Medicaid and cutting some other spending as opposed to raising revenues to offset that cost. So you should be considering the possibility of social spending going down, though ultimately I think what's going to happen is, again, we talked about kicking the can. There's not going to be enough votes to pass some of the more aggressive spending cuts. And the Republicans will ultimately lean on the idea that these tax cuts will be growth additive. They'll lean on the idea that there are potentially other revenue offsets from tariffs. They'll lean on a couple of other ideas to say this isn't going to really expand the deficit as much as the headline numbers say.
It's been great. Michael Zezas, don't be a stranger. Thank you so much with Morgan Stanley, working on our debt and deficit, our fiscal policy, each and every day for Morgan Stanley. Got a huge response to our comments on Netflix like 20 minutes ago. Thank you for that. Comcast Barron's writing up Comcast, the Roberts family this weekend. 10-year total return. Ready?
You go.
It's worse than Generous Motors.
Oh, boy.
4.7% per year. Is basically gone 70 with reinvestment. It's down 30-40% as well. I didn't realize how many employees the Roberts family is. 182,000.
Yeah, it's a huge company. It's just here's a simple problem. You're a subscriber-based business, and you're losing subscribers. Now, you're losing video subscribers, but then you can say, I'm gaining broadband subscribers, so I really don't care. Yeah, but you're losing them too.
Okay, but is it a conglomerate? I mean, is this the Ling Tempco vote of media?
Yes, I think so. What are you going to see here? You're going to see some spin-offs and some sales of those slower growing businesses. They've already talked about spinning out their broadcasting or their cable networks.
Yeah, we'll have to see. Comcast there.
Yeah.
182,000 employees. Wow. Futures up 24 from New York City. This is Bloomberg Surveillance.
Now a look at the front pages. What's making news around the world? Your daily roundup of today's headlines on Bloomberg Surveillance with Tom Keene, Paul Sweeney, and Lisa Mateo.
Good morning, everyone. Paul Sweeney and Tom Keene here with futures up 24. Nice lift to the market this morning. The daily look at the front pages, the Lisa Mateo report without any discussion of Nvidia. It's brought to you by IBKR. Will the average U.S. temperature in February 2025, will it exceed 36 degrees Fahrenheit? At IBKR Forecast Trader, the yes was recently at 44%. 44%. What's your take? Trade your prediction at ibkr.com/forecast. What do you got, Lisa?
Okay, so this is a new report about the highest rated celebrity-owned restaurants. Paul, you're going to appreciate this. Look, TripAdvisor, Google, looked at those five-star reviews. John Bon Jovi's JBJ Soul Kitchen.
Wow.
Yeah, Red Bank, New Jersey. It also has four locations. So Red Bank, Toms River, 2 on college campuses, Rutgers and New Jersey City University. Cool. But the reason they like it, it's a nonprofit. Opened in 2011 with his wife. No prices on the menu. They just suggest like a donation. So it's created to help those with food insecurity. So they're saying great food, great service, commitment to the community. It's a win-win.
Very good.
It's a community restaurant.
It's a community restaurant.
Red Bank is a nice foodie town, by the way.
Can we figure out a road trip there? I mean, this is like a no-brainer.
We go there all the time. Love Red Bank.
We have to. But you got to check it out. I've heard about it, and I have to check it out.
They said 198,212 meals have been served.
Yeah.
43% paid with donations.
It's incredible. Even people who can't afford, they can eat there, and then if they want to work and like do something, they kind of do things like that
Very
too.
cool.
So it's really, really, really a good concept. I love it.
Very good.
Next.
Okay,
Jersey
so
Strong.
this one, Jersey Strong, exactly. This one from the Washington Post caught my eye. More Canadian coffee shops are changing the name of a popular drink on their menu. So the Americano is now the Canadiano. Okay, it's all protesting Trump's tariffs. They expect it to take effect next month. Also, shop owners are saying they don't want to become like this political place, but they want to stand up for their country. So that's why they're doing this. I didn't realize, because some people are protesting, they're saying, well, you're changing the origin because it actually originated U.S. soldiers in Italy during World War II. They complained that the espresso was too strong.
So they put milk
So they
in
put
it?
water.
Water in it. Okay.
Sure,
Yes.
cut it with water.
They cut it with water. And so it became Cafe Americano, which is my favorite drink in the
And now
pantry.
we need an $800 coffee machine to do it.
Yes. But it was just stand out because you've heard like the hockey fans, right, booing at the national anthem at games. So this is just kind of another thing.
When's it based on the
mix.
president's comments in the last 12 hours on trade?
Yeah.
When's it go away? I don't see it drifting away.
We shall see. It's supposed to
Remember
start
the
taking
whole
effect.
French fry thing became, what was it, Patriot fry?
Patriot fries.
or
Yes,
something back in the day.
that's right. It's along the same thing.
Oh, boy.
Along the same
All
thing.
right.
Next.
We've been talking a lot about weight loss drugs, right? Curbing your appetite.
Oh,
but
we have, haven't we?
Yes, we have. And you know that. But it's also posing a risk to curbing sales at top companies. You heard Cheesecake Factory, Keurig Dr. Pepper. They all said that it's going to change the consumer behavior. And this is something we've been talking about. Even Molson Coors said it because it says it's changing people's drinking behavior. What's different is that these companies didn't actually mention that on last year's report. So they're mentioning it on this year's report to show, hey, the significance.
Still a deal.
It's still a deal. I mean, Walmart said it about 2 years ago that it's going to affect how people buy food. But yeah, this is the thing.
They work.
Companies are starting to do it.
They work.
Lisa Mateo, the newspapers this morning. Thank you so much. It's very cool. I'm looking here at Mr. Bon Jovi's. Do I pay for? It's all these questions. There are no prices. A suggested donation.
Okay.
If you are unable to donate, we invite you to join our community to learn about our volunteer. Like you can do dishes.
You can.
I've done that.
Yeah, I've done that
I've
too.
washed dishes.
I have
Good morning.
too.
Good morning, Michael Jenkins in Newport, Rhode Island.
The Parfait
I
House.
wash dishes.
I wash dishes at the Parfait House, Olden Avenue, Trent, New Jersey.
Did you?
Yeah.
That was my job at Rutgers in the
And I'm guessing back then they
cafeteria.
didn't cheat on the hot water. Back then it was hot.
Oh, yeah.
You burn your hands.
Yep, absolutely. Good stuff. That's when I lasted 3 days at McDonald's. I said, can't do it.
Can't do it.
Literally walked across the street to the Parfait House and said, I'll wash dishes. That's better than being
Okay.
the French fry guy.
Guess what? In honor of John Bon Jovi, restaurateur, we play New Jersey music today.
She's a little runaway.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What's the immediate take of a tariff war?
For the longest time, technology has been the driver of this market.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Trump declared a national emergency at the U.S. border with Mexico.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr, Lisa Mateo, and John Bon Jovi music through the morning as well in honor of his community restaurant in New Jersey. Paul, I'm in cash. I'm scared. Who do I need to listen to? She nailed the bull market. Anastasia Amoroso will join us.
In our studio for this first half hour. That's good stuff, Tom.
You know, we'll see. She's taking stock of the sell-off. What are we, down 2%?
Oh, please.
It's a crushing drawdown.
Exactly.
You know, we'll have to see. We're going to have that coming up here. Very important. Rich Greenfield on media in the 9 o'clock hour. Futures, they advance. Why are we up? Is it like pre-Nvidia?
I don't know. I mean, Nvidia's going to be the news. You called it out, Tom. I mean, after the close, I think it could be a big moment for the stock market in general, depending upon how it goes, because you could ride into that narrative, oh, we're overvalued, we're due for a pullback, or let's let it rip. You know, who knows?
We're using the Bloomberg Professional Service today to add wisdom on individual stocks. 29,000, market up, 30,000 employees. It's only up 60%. You taught me this. Off the DES screen, I could see how much it's up in 12 months.
And how about the
6-0?
Here's the funny thing. Analyst ratings, Tom, get this. 68 buy ratings, 7 holds, and 1 sell. 76 analysts cover this name.
How do you pay for the marginal 30th sell-side analyst?
I would argue 5 analysts can make money off of this name. And
Then why are the others doing it?
I don't know, because they have to be. It's just, I don't know. It's
Anastasia's
crazy.
over there nodding her going, this is a racket. Okay. We'll get there in a moment with some real interesting comments on this equity market. We say good morning to all of you from the Interactive Broker Studios. The Bloomberg Business Flash futures up 26. Lisa Mateo.
Yeah, and let's check in with those Nvidia shares. Right now, they're up more than 2.5%. Big focus for investors, that next generation Blackwell chip. We shall see later this afternoon. Let's start with the NASDAQ futures up 0.6%, 138 points. S&P futures up 0.4%, 26 points. Dow futures up 0.2%, or 94 points. Well, after an 11 basis point decline overnight, the yield on 10-year treasuries right now, it is up about, it's little change. It's at 4.29%. The 2-year yield is up 2 basis points at 4.12%. Over to commodities, and I want to point out copper up 3%, $461 per pound. That happened surging after President Trump wanted the Commerce Department to look into those possible tariffs. Why don't we point out gold too? $2,926 an ounce, and we have Brent crude $72 $62 a barrel. WTI crude, $68 a barrel. Consumers, they're starting to spend more on these big ticket items. That's the word from Lowe's. Their shares are up 3%. It says its sales are going to rise this year, although it was slightly below estimates. Then you have TJX, the parent of TJ Maxx, Home Goods. Their shares up 2%. Fourth quarter comparable sales beat estimates. And finally, the key U.S. beer market, well, it's showing some signs of recovery. Anheuser-Busch InBev increased marketing, driving sales. Its shares up 8%. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. There's summa cum laude out of New Mexico with all sorts of other attributes at iCapital. The woman who absolutely nailed the bull market. We protect the copyright of our guests. Get Anastasia Amoroso's note from iCapital. You're not going to get it from us. And once again, you mince no words. You just say, this is transitory. Right. Why is the gloom crew wrong?
Well, I think the gloom crew has been looking for an excuse to de-risk, and they've been hanging on to this narrative of a growth scare. But Tom, let's unpack the growth scare and the inflation scare that we had in the last couple of weeks. And the growth scare has been due to soft data or surveys or consumer confidence slumping to, significantly lower levels. But guess what? Consumers have been gloomy for some time. In fact, for the last 2 or 3 years, we've been in this broad range of depressed consumer confidence. But has that actually stopped the U.S. economy? Has that stopped that same consumer from spending? Not really. And then the other thing that the gloom crew has worried about is inflation, and the inflation expectations popping from 5.2% to 6% in the latest consumer confidence survey. Well, maybe it's the price of eggs, maybe it's the fear of tariffs, but we don't have 6% inflation. We're likely to have 2.6% year-over-year core PC inflation reported this Friday. So I think the softness of economic data is an excuse. What's really happening is the technicals, it's the sentiment, it's the retail traders really stepping back. But that is a process, Tom, and that's why I say it's transitory. It doesn't last. It doesn't fundamentally change the outlook. It doesn't last forever. And I actually think we didn't just have a 3% pullback on the S&P. We had a median 13% pullback in a stock in the S&P. So I think we're getting closer to the finish line of this pullback.
Earnings, we're 90% of the way through the earnings cycle here. What have you taken away? What have you learned from some of the guidance that we've heard from corporate America?
Yeah, I think generally speaking, corporate America is still optimistic, but there's certainly some uncertainty and there's some reservations about what's going to happen with tariffs. And, look, if you look at earnings revisions, they have actually been trending lower in the United States, which, by the way, is in contrast to Europe. It's in contrast to Japan. And the reason for that is, we're expecting 13% earnings growth this year, but now we have to shave off a little bit because we have dollar strength. Then we have to maybe shave off a little bit more because we have tariffs and reciprocal tariffs. So, because of that, the sentiment perhaps was not as buoyant as it would have been otherwise, but it does not erase the 13% earnings growth we expect.
Are there sectors that screen well for you right now?
Well, first of all, I actually think you have to stick with what's working right now. And the core theme in the market is actually artificial intelligence. I love the fact that Nvidia...
So you'll be paying attention to Nvidia today?
a little bit.
Okay.
Along with the 60 other analysts that are covering the name. But look, Nvidia gets the last word on what's happening with the momentum in artificial intelligence. And I think what we've heard from others is already pretty constructive. Whether it's Meta, whether it's Amazon, whether it's others, they're continuing to spend on AI CapEx. And, to me, the key takeaway from DeepSeek actually is not that we're not going to need as many chips, but it's the fact that more people can skip the training phase and actually go to the inference phase. And so for that, guess what they're going to need? A whole lot more semiconductor content. So I think you stick with that. And after the pullback that we're nearing some oversold conditions in some of the AI software stocks, specifically AI semiconductors. So I'm looking at that theme still.
If you're joining us right now on your commute across the nation, good morning on Apple, CarPlay, Android Auto. Good morning, 92.9 FM in Boston. Thank you for being with us on YouTube. Subscribe to Bloomberg Podcast. This digital experiment growing each and every day. Tracy Alloway and Joe Weisenthal helping out there with Odd Lots. Look for that as well on Bloomberg Podcast. Anastasia Amoroso with us. You bring prodigious mathematics to your research note. You mentioned earlier, let's discuss this. The SPX is down 3%, but when you take out the high flyers, the median, the center tendency is down 13%. So can we say we've had a median correction on our way to a median bear market?
Well, I don't think we're on our way to a median bear market, but we have had a meaningful median correction of 13.5%. And Tom, there's another way I like to look at it, which is in terms of oversold conditions. And the thing that really jumps out at you is the S&P did not quite yet hit the oversold level, neither has the NASDAQ. But if you look at the Mag 7 stocks, they're very close to actually hitting that oversold level, the relative strength indicator of RSI.
Can I translate this for you? You're at New Mexico. You figure you're going to get a solid B. Maybe you'll sneak out with a B+. And in the front row is Anastasia Amoroso, who was 18 years old and had nailed box plot analysis.
You know, I was
like, where did this girl come from?
I was always a front and center kind of student, I will say.
I could just see, did you have you're too young for slide rule. Did you have the HP12C or something?
Yeah, of course.
Of course. And knew how to use it, right?
I did.
Actually knew how to use the calendar. It's like with Lisa here and Anastasia, it's like Nerd Patrol.
I know.
It's great.
I know,
Save
exactly.
us all.
Anastasia, how should we think about valuation? Because a lot of strategists will say, that's all my clients want to talk about is kind of the valuation of the market. How do you kind of frame that for your clients?
I guess I'm a little surprised that's all the clients want to talk about, because we have had the multiple at S&P 21, 22 times. And, you know, there's a reason for why that multiple continues to be persistent. First of all, we have that 2.3% earnings growth, or GDP growth. That's not going away. So that's supporting the multiple. The other thing, you know, back to the AI theme and back to the tech theme, if you look at the S&P 500 margin, 12.5% is not bad. But guess what? It is double that in some of the tech shares. And so that's why the margin continues to be elevated. So I don't see that as a huge concern, provided that that softness that we see in soft data doesn't actually turn it into a recession. That's not my base case.
Underpin it with GDP. We had earlier Jim Bianco linking in nominal GDP into revenue growth at companies. Do you have the same relationship here where, you know, once again, there's gloom on this and we surprise with okay GDP, which leads to solid revenue growth?
Yeah, I think revenue growth should remain solid. I mean, if you look across the pockets of the U.S. economy, the unemployment rate is low. Wage growth is actually outpacing inflation at this rate. So all of that does support consumption, which drives revenue growth. Now, outside of the U.S., you know, for companies who rely on that revenue growth outside of the U.S., things are looking up too. I mean, Europe, for example, first of all, they've avoided the Mag 7 exposure and the meltdown. But there's something fundamentally different about the European economy, which is they're actually cutting interest rates. And they've been doing that ahead of the Fed. And I think that cumulative benefit of rate cuts will start to accumulate for Europe. It should turn around the housing market. It should turn around the commercial property market. So if you have European exposure in your revenues, that's looking up as well.
So are you saying go global, and with that, do you get finally a weaker dollar call?
No, I don't think so, because the interest rate differential is really the most important thing that I think will be driving the dollar, and tariffs is in the second place to that. Look, the way I look at international, oftentimes it ends up being a trade, and I think Europe is a good trade right now, given the deal that we're seeing with Ukraine and Russia, hopefully, given the ECB moves, but longer term, to really invest in Europe or Japan or any other places, what I would focus on, Tom, is what are the leading companies in Europe that are tied to artificial intelligence, that are tied to decarbonization?
Can you give us a name?
I can't.
But Lisa, would you like to give us a name?
No, but I'll give you one other idea. And of course, the markets have already reacted to that. But clearly, Europe does have to beef up the defense spending as a result of the negotiations. And so European defense stocks have woken up and are doing quite well as a result of that as well.
So what are the headwinds here? A lot of folks will say the noise coming out of Washington, D.C. is so broad and so consistent that it's hard to really look through it and maybe focus on fundamentals. What do you say to people like that are saying, I'm just not sure how to play the discussion about tariffs and all the other economic policy issues that are coming out of Washington?
Look, first of all, this is exactly in line with the expectation that we had going into the year. The name of the outlook, as we titled it, it was the year of solid underpinnings, which are all the economic fundamentals that we talked about, but with plenty of wild cards. And I called it wild cards because they're exactly that. They can turn out to be positive. They can turn out to be negative. We don't know. But what you have to focus on is what is the trajectory of the economy? What is the trajectory of revenues and earnings that you talked about, and position yourself around that. Now, from the asset allocation perspective, I don't know if it's the time to go all in on small caps given the uncertainty, but I think it is the time to go all in on higher quality domestic companies that align with the America First agenda. I think it is time to continue with the AI trend. And the other thing I would say, private credit, for example, stands out as a great opportunity in this environment.
When you came to America, did you speak English?
I did.
You did? Okay.
It wasn't, well, it was all right.
It was all right. Okay. Like my English. Okay. It was that
not quite that good.
I want you to talk to Americans that have never left the country about American exceptionalism. You and I talked 2 days after Putin invaded Ukraine, whatever. Let's forget about the politics right now. It's not fair to you. But I want you to talk about this phrase, American exceptionalism. Talk to Americans this morning across this nation. What does it mean to you?
It is an exceptional and outstanding place that nowhere else can you replicate that. And I do travel globally. I immigrated to the U.S. when I was 16, but nowhere else can you get the same stability of government, believe it or not, as you get in the United States. Nowhere else can you get this pro-business mentality, even though we argue about the deregulation here and there. And nowhere else, frankly, can you get the same opportunity set as you do here. So it is truly, truly an exceptional place. And this is why when I think about investing, yes, while it's tempting to go invest in emerging markets or maybe trade around in Europe and Japan, if you're a long-term investor, you have to focus on the pillars that are going to be there. And I think the pillars of American exceptionalism will be here.
Anastasia, thank you so much. Anastasia Amoroso, iCap, with us this morning here. She continues, it's transitory, these challenges we have, and she says, get on board in your own way. Look for her research at iCapital. She lifts the market, futures up 25, now up 29 as well. The VIX 18.92, it comes in, it's a better tape this morning. Sweeney noticing oil, American oil, ready? 68.71. That's the McGlone vector.
The cost of production, Tom, they tell me $50, $55 a barrel, so they're still making money.
Dollar flat. We're considering Zurich and Brasserie Lip
Yes,
for a
we
remote.
are.
We'll see on that as well.
Price out some flights.
With our news in New York City, Michael Blau.
Thank you very much, Tom, Paul, Lisa. The Republican-led House has passed a budget blueprint meant to deliver on President Trump's agenda. It includes $4.5 trillion in tax breaks, $2 trillion in spending cuts, and extending the tax cuts that President Trump signed in his first term. House Speaker Mike Johnson.
Grateful to my colleagues who worked so hard to get us here, and to all the leaders of the chairs of the committees of jurisdiction.
The vote was 217 to 215, with all of the House Democrats voting against the measure. President Trump will meet with his cabinet this morning, and one of his biggest supporters, Elon Musk, will be there. Musk, who oversees Doge, is insisting that federal workers submit a "what did you do" list or possibly be fired. The White House says that they have already gotten 1 million responses. President Trump.
Well, it's somewhat voluntary, but it's also, if you don't answer, I guess you get fired. What it really is do people exist?
Meanwhile, Katia Morgan was a healthcare specialist at the Centers for Medicare and Medicaid Services. She is among those fired in the Trump administration's Doge effort. Morgan's job involved people concerned about going to the doctor and getting overcharged for medical care or being discriminated against because of a health condition. Morgan was one of those health and human services specialists who provided oversight and accountability over insurance companies.
There are millions of people potentially that are buying health plans from the health insurance marketplace that are going to have maybe less oversight of their plans. There are fewer people around that are doing those checks to make sure that they're covering the benefits that they need to.
Yesterday, 21 Doge staffers resigned, saying that they would not be part of dismantling critical public services. Ukraine and the U.S. have reached an agreement on a framework for a broad economic deal that would include access to Ukraine's rare earth minerals. One Ukrainian official said Kyiv hopes that signing the agreement will ensure the continued flow of U.S. military support that the country urgently needs. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
I'm reading Roger Angel. You know, I'm getting into baseball season, the giant Roger Angel. And, you know, he brings this up. Paul, this is Johnny Damon, 2 for 5. Bobby Abro, 2 for 5.
Yep.
A Brave, thank you. I don't know. You know, what do I know about the Yankees? I know nothing. you know,
and
I
like
know
it that
it's
way.
Dick Raditz. That's all I know. Like Martha Raditz. Okay, they played the Tigers in 2006.
Okay.
Jeter, 5 for 5, 3 runs. He scored so many runs he only had 1 RBI. It's the greatest ALDS performance ever. 2006, he single-handedly beat the Detroit Tigers.
Yeah, absolutely. That's why
I bring this up because of Michael Barr.
I was going to say, why did you bring this up, man? I'm hurt.
Tigers came back.
Yeah.
You know, they did it. Curtis Granderson. You know,
I like that.
there's a great name.
There's a good.
You know, but I just think this is the Yankee Report. Doug Cass makes me subscribe to this. The Yankee Report. You know, 5 for 5, a homer, 2 doubles in Game 1, and yet the Tigers shown.
Yeah, I mean, I'm excited about this season because speaking of baseball, as you mentioned, already the Mets have big problems because
I miss this. Please,
there are a couple of pitchers who are already hurt, and at least 2 of them, from what I understand. So there's going to be.
And for the Yankees, Giancarlo Stanton didn't even get out of like the first week of, and now he's hurt again. So you can't. I mean, he's great in the playoffs. I just can't have him on my roster.
I love Lisa's look.
Yeah, she's
Karma. Sorry.
Orioles, Yankees, March 3rd. Spring training. Sounds like road trip to me.
Yeah, and we've got the in.
You know,
we know some people at the Orioles, don't we?
Yeah, I think we could do that.
All right, so maybe we can get a ticket or 2.
Major shout out yesterday, a high point. Brian Moynihan in conversation with David Rubenstein. I got huge feedback on him talking about, you know, showing up at Brown, playing rugby.
Yep.
He played rugby in law school. Yes. Like you have time in law school to play rugby, and then walking through all the Chad Gifford and Terry Murray and all of the roll-up. And I'm going to say this. I've never said this on air. What they mopped up after Ken Lewis was an act of God.
Yep.
I was peripheral to that. And what they, absolute act of God. That was a great conversation. Or David
45
Rubenstein
minutes, it was in depth.
with Brian Moynihan yesterday. Thanks to our team for bringing us complete coverage of that interview. That's what we like to do at Surveillance. Futures up 29, Dow futures up 103, the VIX 18.93. It's Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. Well, we've got futures advancing this morning. Traders moving on from concerns over weak U.S. consumer confidence and a focus on Nvidia earnings later this afternoon. Its shares are up more than 2.5%. NASDAQ futures up 0.8%. S&P futures futures up 0.5%, and Dow futures up 0.2%. We have the 2-year yield, 4.12%. That's up 1 basis point, and the yield on the 10-year, 4.28%, and that's down 1 basis point. The Bloomberg Dollar Spot Index up about 0.1%. Few companies making news this morning. The information reporting Meta considering a new data center campus. This is to cater its AI needs. It could cost more than $200 billion. And Target announcing a partnership with sportswear brand Champion. The collection will be available in stores and online in August. And finally, McDonald's says, well, you know what? We're not going to issue any surcharges on eggs. In fact, it's offering the McMuffin for just $1. It's one day only on Sunday. That's all you got. For on-demand news 24 hours a day, that is your Bloomberg Business Flash.
So instead of Benoit, you know, wonderful French cuisine, Ellen Ducasse, Benoit, keep Mrs. Keene happy. I go, surprise!
Egg McMuffin.
McDonald's, 3rd Avenue. Really.
You got it.
But this is work. I mean, seriously, this is working for a half of America, seriously, flat on their back. I mean, this marketing is working. I mean, there's no other way to put it.
Yeah, but you see the surcharges, though. You've seen it from Denny's and Waffle House. Remember Shea Waffle?
I can't get eggs at home. We have no eggs at home right now.
Yeah.
You know, I've told the kids, usually have some vodka. You know, I don't.
That works.
It's difficult. Futures up 30. Lisa Mateo driving the market higher every day. This is an important conversation. It's with Tony Rodriguez of Nuveen. And the heritage here is Nuveen basically invented access to municipal bonds out of Chicago decades and decades ago. Tony Rodriguez with all sorts of good work on fixed income for Nuveen is head of their shop there. Do muni bonds still matter to Nuveen? Is it still part of what you do each and every day?
It absolutely is. I mean, I think we're still the 800-pound gorilla and a dominant force there. If you look at our fixed income assets, it's actually now less than half, around 40%. So the business has grown dramatically.
Away from munis, but still you're huge in munis.
Munis have grown, but also the rest of the business has grown pretty significantly as well.
You did a unified trust, whatever it was called years ago. You'd buy 10 or 14 muni bonds in a portfolio. Is it still efficacious for Paul Sweeney to buy an individual bond, or do you buy it in a package? Which is fairest, best for the client?
Well, what's interesting is that over time, they've actually become pretty competitive with each other because costs, as you know, the industry's under a lot of pressure. Costs are coming down, maybe not as much as with the Egg McMuffin, but costs are coming down. So now you can get a separately managed account that's very attractively priced from a cost perspective, but you can also buy very low-cost packaged products, we'll call them. So whether it's an ETF, whether it's an open-end mutual fund, whether it's a closed-end fund, as costs have come down, really the ability for an investor to access across all those vehicles is fairly competitive one with the other.
Interesting.
Tony, I'm looking at the INGO function on the Bloomberg terminal. The Bloomberg Index browser shows me kind of where fixed income returns are year to date. There's a lot of green on the screen this year. Where are you seeing, I'm getting 2.5% returns year to date. And a lot of these fixed incomes, treasuries, high yield, all that kind of stuff. Where are you guys seeing the best opportunity?
Yeah, so when you think about the total return right now, we've had a little bit of a decline in rates over the last couple of weeks, let's say. We're not expecting that to continue and that to be a tailwind for returns. So we expect that you'll see kind of range-bound interest rates, but you'll be able to earn the yield. So when we wake up at the end of the year, you'll be looking at returns that are anywhere from kind of call it 4 or 5% at the kind of shorter, high-quality end of the market, and maybe closer to 7.5%, 8% at the lower quality, kind of higher credit risk parts of the market. So we don't think the opportunity is necessarily about falling rates. We do think the opportunity is in earning that yield. And we think there's various places that you can do that on a very effective risk reward basis. What we're not doing is pounding the table that there's only one particular segment of the market, because right now valuations are pricing in quite a bit of good news. So you can't say, well, this is dramatically cheap. The only area we would say where you can really kind of find some cheapness, and this is not only in fixed income, but still in the commercial real estate market. So we've seen some stabilization there, but the recovery is still ahead of us.
Securities, is that what you're
saying? So commercial mortgage-backed securities would get you the commercial real estate. If you look at kind of the more traditional parts,
CMBS.
CMBS, exactly.
Nailed that.
Yeah.
Got it.
Mortgages are still attractively priced and fairly priced when you think about kind of other high-quality alternatives, investment-grade credit, asset backs. But the CMBS market, the actual commercial real estate market in terms of real assets, there's where we're seeing a bottoming. You can still find now some either attractively priced because the spreads are still wide, or some significant potential upside if you think of the underlying real properties.
Tony Rodriguez with us here.
Everything I learned about the commercial mortgage-backed securities market,
It was with a drink in your hand.
It was like in 2-week time period in 2007 when Bear Stearns was blowing up. And I'm like, what are those securities?
Yes, precisely right.
I went to Google, Wikipedia, and that's what I learned.
I sat in the backyard up somewhere near Boston a million years ago with a guy that was packaging this stuff. And I learned more over a barbecue and a can of Narragansett Lager beer than I've learned in my whole life. Tony Rodriguez with us with Nvidia as we get smarter on fixed income. Does leverage, I make a joke about the triple leveraged all cash fund. It's a joke, folks. Does leverage work to goose yield for Nuveen? Do you have leverage? I mean, we have leveraged ETFs now. Nvidia, what? Quintuple leveraged? Yeah, exactly. Does leverage work, Tony Rodriguez?
You know, in the strategies where we use it, we do think it's effective. Right now, you've seen a 100 basis point drop in the front end in terms of the Fed funds rate. So financing costs have come down. The curve is steep. Certain markets, leverage is more attractive. So you mentioned the municipal market earlier. There you have a more positively sloped curve than you do in the taxable treasury market. So there, leverage can be is more effective today. If we kind of fast forward, we think a year, you get maybe another 2 cuts out of the Fed. Leverage becomes a little more attractive in the taxable market as well. But yes, with a positive slope curve, with relatively attractive financing costs, leverage can enhance returns for investors.
What's a duration trap right now for our listeners and viewers? To be too short, or is everybody wicked long in 30-year, mass housing paper or something?
Yeah, so our advice is that you want to be neutral to longer duration. So again, we think it's a range-bound environment, so we don't say be very long duration because you're about to hit a home run with a 100 basis points drop in the 10-year. It's a good hedge. So if you think about the tail risk of maybe downside to the economy, right now, fixed income, longer duration, high-quality assets, treasuries, IG corporates, high-quality munis, they are going to provide a nice hedge to a possible downside tail risk in the economy. That's not our base case, but unlike when you think about, 22, 23, when fixed income wasn't a good hedge, starting yields were low, rates were rising. Now we're much higher level of starting yields, and we think the response would be to a slowing economy, lower rates, not only from the Fed, but across the board. So that's why we're kind of neutral on duration because we think we're range bound, but leaning towards being overweight and longer because it is providing a pretty attractive hedge in a market where there aren't really that many attractive hedges. Valuations are fairly full in equities, in risk assets and fixed income. So we think it's a good hedge.
The Bloomberg taxable municipal bond index is up 2.84% year to date.
Wow.
Talk to us about the municipal bond market.
So the municipal bond market's in good shape. Like I mentioned, starting yields are good, but the fundamentals there are very good as well. So you think about like property tax collections, very high. You think about rainy day funds, so the actual credit quality, the underlying credits, very solid. You think about the essential use of a lot of the debts, right? Water, sewer, also very attractive. And when you think about the technicals, in 22-23, we saw like 175 billion of outflows from the muni market. 24 turned positive. 25 so far is positive. So the technicals are much better balanced right now. So the outlook in munis is, again, that kind of 4 to 7% return, depending on the quality level.
We didn't have you here for this. Cubs are 6-0 in the Cactus League. I mean, what am I missing here? Are they destined?
Well, as a Washington, D.C. born and raised kid, I'm an Orioles fan. So
that's the right thing to say.
I wish the Cubs well, but I'm an O's fan.
Usually I'm wearing orange here, just to, keep them.
We got a new owner, so all good there.
Exactly.
Good. Very good.
The Cubs too?
No, the Orioles.
The Orioles have a new owner?
Yeah, I'll explain the ownership structure to you at the break here, but we have very close ties to the
Tony, thank you so much. Tony Rodriguez, what a clinic there in fixed income. Learned a lot there, particularly on Nuveen and all they've done, their heritage of municipal bonds. The market keeps going up. Is it Anastasia?
I think so. She comes in here. She's just, buy the dip.
We're up 0.6% on the Standard & Poor's 500, 0.8% on the NASDAQ, the VIX solidly under 19. I don't know what, my head is spinning. I mean, it's like so many.
And then you've got Nvidia after the close, Tom. So you have to make sure you've got your surveillance beverage and you're all comfortable.
We do. That's exactly how we roll for the Nvidia earnings. I still don't understand what they do. I have an Nvidia thing in my computer. It's a black thing. I don't know, no idea what it does. How about that for tech knowledge? Stay with us. From New York City, worldwide, Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We have NASDAQ futures leading the gains this morning. This is with Tech in Focus, Nvidia reporting later today. Analysts say that its numbers could be a make or break event for the market, at least in the short term. Nvidia shares right now, they're up more than 2.5%. Let's start with NASDAQ futures, up 0.8%, 170 points. We have S&P futures up 0.5%, 31 points. Dow futures up 0.2%, 123 points. The two-year yield, 4.12%. That's up 2 basis points. And the yield on the 10-year, 4.29%. And that is little changed. We have more economic data out today. U.S. mortgage rates dropped last week, the lowest level this year. The MBA says the contract rate, 30-year fixed mortgage, 6.88%. There you go. Later this morning, we get a read on new home sales. Tomorrow, U.S. GDP, followed by PCE inflation on Friday. We have shares of Super Microcomputer. They're really surging up 20%. It filed paperwork to become compliant with NASDAQ rules. Then we get to stick with tech. We go to Apple. It signed an agreement with Indonesia. That's to invest in the country, paving the way for that iPhone 16 sales to pick back up there. And finally, shares of Intuitive Machines. They're up 9%. The reason why? Well, they have a launch today of its moon lander from NASA's Kennedy Space Center. That's happening around 7 p.m. Wall Street time. That is your Bloomberg Business Flash. Paul and Tom.
Is this a moon lander going up today?
A moon lander, yes.
Are they going to the moon?
It's named Athena. It's like as tall as a giraffe.
Oh, really? I know nothing about this, folks.
Didn't we do the whole moon thing?
We did
like
the
in
moon
the 60s?
thing a couple years ago.
Why are we going back? I don't understand. Why don't
We're going to Mars, and I don't know if you need to go to the moon to go to Mars.
Okay, all right.
I'm not sure.
Okay.
I'm not read in on this.
All right.
Welcome to the NASA Space Station.
Right.
We're Bloomberg Surveillance. We do economics, finance, investment in New York. Thank you so much for joining us. Good morning, 99.1 FM in Washington, up the corridor to Bloomberg 1130. Good morning on YouTube. Subscribe to Bloomberg Podcasts. And Boston, 92.9 FM. Nate Tufts joins us now, Global CIO, Multi-Asset, Manulife / John Hancock is well. You know, I sit there, Nate, and I look at and Paul knows this better than me, the heritage of buy-side Boston. Is there an optimism institutionally about the stock market, or is the fear meter, is it increased in the last 4, 5, 8 weeks?
I would say the fear meter has definitely increased, but there is still quite a bit of optimism when you look at consensus. I think generally people are looking at this, including ourselves, is that the current growth concerns or scare that we're seeing is a bit more of a paper cut than it is necessarily a big wound that you're going to lose a finger on. So the reality is we are starting to see a little bit more uncertainty and a little bit more worries about economic growth as well as inflation. But at the end of the day, we still have a U.S. economy that's doing pretty well.
It's sort of like what we heard from Anastasia. I mean, you know, it's transitory. Get over it. Get on board. This with futures up 29.
Nate, global CIO for multi-asset solutions. What's your favorite asset solution today?
Well, unfortunately, it's kind of a very easy one. We are still overweight equities. Now, we're less overweight, but we still think you want to be overweight equities, and we still think you want to be leaning into U.S. equities. That doesn't mean there aren't opportunities outside the U.S., and we're watching it closely. But the path forward with the least resistance, in our view, is to maintain a modest overweight to equities and still be centric on the United States. And, thankfully, that's worked for a long time, but I don't see what meaningfully changes that trend in the short term.
So a lot of folks are saying, just go big cap, just go high quality. You don't need to be a hero here. How do you guys think about U.S. equities, where you want to be within U.S. equities?
The one positive that we think that's happening, and we've seen it over the course of the last 12 months, is I don't think you need to be as reliant on just the big tech companies. We are seeing broader participation in the market. We saw it last year where some sectors actually did better than the technology sector. We're seeing it this year with the Mag 7 now basically in correction territory, and other sectors are doing much better. So we're looking at areas to broaden out our exposure within the U.S. beyond just tech. And it's not that we're going underweight technology stocks. We're just taking the wins and the gains that we've seen in the technology sector and redeploying them to areas like financials. Healthcare is another one. Even on the smaller cap, mid cap area of the market, we're seeing more opportunities. And we're just seeing a broader participation in growth. We're expecting earnings growth to be pretty strong this year, but it's not just going to be the big tech names. It's going to be a broader universe of names that are participating in this growth.
I know that Manulife's got an axe in this, but there's such integrity to the name of Manulife and the heritage in Boston of the John Hancock Company. What I see in a bull market, Nate, is a structure of product to be different, to be, all the different conveniences of ETFs and all that, is basic security buying. The long only buy side, basic income fund, growth fund, those kind of stock funds, do they still have value?
I absolutely think they do. Our clients are increasingly looking for outcomes versus a specific return or risk objective. They're looking for income solutions. They're looking for ways to manage their volatility as they approach retirement. So I think increasingly blending both passive and active to deliver a solution that meets the outcome that our clients are seeking is really what clients are asking for. And that does include stock selection on the active side. Now, we tend to focus our active on areas where we get beneficial, differentiated type of exposure, and we use passive where we just want to get the beta and the exposure to the upside or the downside.
Quickly, what's one example of an active direct exposure?
Well, on the fixed income side, we definitely prefer active management. The security selection there is so important. So whether you're looking at credit exposure, high yield exposure, or even just across the many nuances of the fixed income market, we are strong believers in active management across the fixed income world.
Nate Tuff, thank you so much with Manulife this morning. Greatly appreciated. Futures up 26. There's way too much optimism this morning.
Yeah, we'll take it. We'll take it.
Yeah,
we got certain tech company reporting earnings after the close that have an impact. So we'll be there.
We'll have to see.
As will the 76 analysts who follow the company.
Michael Barr is thinking of becoming the 77th analyst with our news in New York City securities analyst, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Sources tell Bloomberg Ukrainian President Volodymyr Zelensky says he has received an invitation to meet with Donald Trump in Washington this week. Negotiators secured an agreement giving the U.S. control over half of the war-battered country's natural resources. Ukraine's cabinet will meet today to endorse the deal, which the Trump administration demanded as part of its effort to secure a swift end to Russia's 3-year war. We get more with Bloomberg News senior editor Bill Ferries.
There have been reports of trillions of dollars in mineral deposits, but the reality is, when you talk about rare earth reserves, Ukraine has no rare earth reserves that are really recognized internationally as economically viable. So that's where a lot of questions, I think, are going to come up on how much money would really go into this fund. Is it really an economic deal, or is it more of just a political deal?
Bloomberg's Bill Ferry says it's not believed there are any security guarantees included as part of the deal. House Republicans have passed a budget blueprint meant to help President Trump deliver on his agenda. The final tally was 217 to 15, with 3 Republican lawmakers flipping their votes after heavy lobbying from House Speaker Mike Johnson and President Trump himself. Johnson after the vote.
This is the first important step in opening up the reconciliation process. We have a lot of hard work ahead of us, but we are going to deliver the America First agenda. We're going to deliver all of it, not just parts of it, and this was the first step in that process.
The bill has $4.5 trillion in tax breaks and $2 trillion in spending cuts. Pope Francis is sitting upright and receiving therapy for double pneumonia while he remains in critical condition. The Vatican is waiting for the results from a CT scan taken Tuesday evening to check on the status of the complex lung infection that has kept Francis hospitalized since February 14th. The Vatican said the Pope had a peaceful night. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Let's revisit this now for the 400th time. We do this with Paul Sweeney. When does the roll-up happen in Hollywood? We've been 18 months. We've been calling for this, and they like to go to lunch. I mean, that's all there is to it.
They do. They get paid a ton of money. You think bankers get paid a lot? Go see what some of the senior execs and the CEOs of Hollywood make. And as Sumner Redstone once said to me in the 21 Club, if I got to pay Tom Cruise $20 million a movie, I got to make more than that. So I said, all right, that makes sense. So that's how you go. So we'll see. But Rich Greenfield's going to be in later on this morning. We'll ask him because he's really wired into it.
Off the bottom, Warner Brothers, Steve Roth's Warner Brothers is up 25% or whatever.
Yep.
Except it's down 27% per year since the advent in the heart of COVID.
Yep.
I mean, I just don't get your world.
I
looked at Variety last night. Great article on Fox and all that, and I don't get it.
Yeah, and a lot of investors are just sitting on the sidelines. I don't get it.
We'll have to see. Rich Greenfield with us in the next hour from New York City. This is Bloomberg Surveillance.
You're listening to Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Paul Sweeney and Tom Keene getting you through the morning here towards the Nvidia earnings this afternoon. Carol and Tim will have all that for you. Green on the screen, not like an hour ago, but nevertheless, futures up 23, as Paul just mentioned. The VIX 19.09. Quickly here, on a roll. They've had an exceptionally strong 90 days. Joe Weisenthal and Tracy Alloway doing odd lots. See that at Bloomberg Podcasts. Subscribe out at YouTube to Bloomberg Podcasts. And we had Jim Bianco on earlier this morning. You talked to him for like 4 hours or something as well. What did you learn from Mr. Bianco in an extended conversation?
The crazy thing is, I think we probably could have spoken to him for even longer. But, you know, our producers would probably be mad if we went on for 12 hours. But anyway, this all comes down to something called the Mar-A-Lago Accord, which is just a hypothetical at the moment. And the idea, the way I've been putting it is basically the U.S. gets everything that it wants. It can have its cake and eat it too. So it gets a lower dollar, a weaker dollar that it needs to achieve Trump's economic aims like reshoring manufacturing, boosting economic growth. It also gets to maintain its preeminent position in the global financial system, you know, the country that basically gets its deficit funded by everyone else because it exports so many U.S. treasuries. And it's easy to dismiss this as a crazy idea because it is very extreme. But on the other hand, we've seen Trump, probably as Tom would put it, like rip up a bunch of norms and old school institutions.
So this Mar-A-Lago Accord, I mean, just define what it is for most people, because I'm not sure everybody's clear on it.
Sure. So there are a bunch of different elements, but basically you can read all about it in Stephen Miron's paper from November 2024. He actually lays it out. But the idea is you do a bunch of things. You basically get allies to agree to weaken the dollar by selling off some of their dollar reserves. And the reason they would do that is because you exchange national security in return for that. You know, the U.S. says we're going to give you a security pledge if you help us weaken the dollar. That's very similar to
military security pledge.
Military security.
If you help us weaken the dollar by selling your U.S.
I know it sounds extreme,
but no,
they're already doing it with
South Florida.
They're already doing it with tariffs, right? That is the implicit trade-off in the tariffs.
This goes back to Valerie Giscard d'Estaing in France and the seniority of the United States, and I totally take your point. It's huge. One of the great things about odd lots is they'll steal from anyone.
Sure.
They go to the physicist from Rutgers, Liz McCormick, who's analyzed this within the bond market. Tell our people who the glorious Liz McCormick is. Physicist, as she reports on bonds.
Liz is one of the greatest, probably the greatest bond reporter out there.
Like literally.
Literally.
I mean, without exaggeration.
And I got to say, she is an absolute pleasure to work with. I have never had a bad experience double bylining with her, which, you know, I can't say for every other journalist. But she's great. And the other thing, she really gets, I guess, the intellectual history and progression of this idea, because even though Miron is getting a lot of attention for it, there's a sort of layer, like a Russian nesting doll of ideas below this. And if you look real carefully, one of the original idea actually comes from Zoltan Pozar, who you know, the ex-Credit Suisse analyst. He actually published a note called the Mar-A-Lago Accord in June of last year, and Miron expressly picked it up in his paper.
Just one final question. We're running out of time. In our world, we're running out of time. You guys go on forever. But the basic idea here is the fear of getting out above 5% in a 10-year yield. What's the Wiesenthal-Alloway summation of, quote unquote, the fear of the 60s?
The fear of the 60s. I mean, I think when it comes to bond yields, we're still trying to figure out how much of the moves are down to economic expectations and what we think of the Federal Reserve's reaction function versus the sort of term premium, added risk premium embedded in U.S. debt because of the unpredictability of the Trump administration. That's the big question.
I got to ask you this. The Tracy folks has an international heritage, including work at the London School of Economics, and she grew up in Asia, blah, blah, blah. You know, have you ever heard Bon Jovi? Do you know who John Bon Jovi is?
Of course I know who Bon Jovi is.
Okay, good. We'll play John Bon Jovi for Tracy Alloway. Odd Lots, YouTube podcast.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
The president wants lower interest rates from Chairman Powell.
You can make the argument that this is a really rich market.
With Lisa Mateo on markets.
Stocks are coming off another record high.
And Michael Barr with news.
President Trump signing a wide range of executive orders.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Lisa Mateo, Michael Barr. We're all here today. Good morning. It is Bloomberg Surveillance on economics, finance, investment, on cabinet meetings at 11 a.m. The market was up 30. Futures now are up only 23, and it's sort of percolating up. Mr. Musk, Paul, will attend the cabinet meeting today.
Okay. All right. Very good. Well, he's certainly front and center for a lot of these decisions.
We may get it. We don't know. We may have it. We may not.
If it's open to the press, we'll hit that.
We'll have to see, but that's what we got. Maybe at 11 a.m. you will have a cabinet meeting. It's got to be sort of like the first cabinet meeting.
I think it is, yeah.
Secretary of Commerce Lutnick was just approved.
Yep.
And all that. So Thank you, Ari. First full cabinet meeting is what we're calling it. Futures up 24, the VIX 19.07. An astute analyst, Ivan Feinseth, coming up here in a moment. Right to it from the Interactive Broker Studios, the Bloomberg Business Flash, Lisa Mateo.
Yeah, we've got a little bit of optimism returning to the market. It's really been a rough stretch on Wall Street. A lot of anticipation ahead of Nvidia's earnings after the close. Its shares are up more than 2%. We'll start with Nasdaq futures up 0.6%, S&P futures up 0.4%, Dow futures up 0.1%. The 2-year yield 4.11%. That's up 1 basis point, and the yield on the 10-year 4.29%, and that is little changed. To commodities right now, COMEX gold $2,918 an ounce, but I got to point out copper up more than 2% at $458 per pound. The Bloomberg Dollar Spot Index up about 0.2%, and to earnings we go. We'll start with shares of Lowe's. They're up 2%. Forecast sales to rise this year, although it was slightly below estimates, but investors like the sound of it, so they're up. Its shares are up about 2%. TJX, you know them, the parent of TJ Maxx Home Goods. Their shares up more than 3.5%. Love them. Fourth quarter comparable sales that beat estimates. And finally, shares of the world's largest brewer, Anheuser-Busch InBev, surged the most in more than 3 years. Earnings beat expectations. Its shares are up 8%. That is your Bloomberg Business Flash. Paul and Tom.
We're spending a lot of time today on the DES screen of the Bloomberg. Paul and I are looking at, the terminal functions and what they can bring us. TJX, I mean, you go in and it's like this, it's closed. It's what that 15.2% total return and a consistent total return. You know, they went down in COVID, but not like a lot of people.
No, I mean, this is a big company. That's almost $140 billion market cap.
I had no idea. Wow. Framingham, Massachusetts, they all eat at Ken's Steakhouse. 349,000 employees.
Wow, I didn't know that.
That's like bigger than J.P. Morgan.
I know.
That's nuts.
Alex Steele's a big fan of TJX.
They have great bargains and like brand
good
name
brands,
prices.
Right?
Yes, great brands.
I learned this from Lisa and Alex.
I get my Calvin Klein dresses there.
Really?
I'm telling you, good prices.
Well, good morning to Carol Meyerowitz and Ernie Herman, and the Red Sox tickets are awesome.
Awesome.
Good morning, 92.9 FM, Boston. I don't even know if Ken's Steakhouse is still there. Somebody out on YouTube, tell me if Ken's Steakhouse is still there. Ivan's like, what am I on? Ivan Feinseth joins us right now, just absolutely fabulous in securities analysis. How do you, with Graham Dodd and Cottle, Ivan, which both you and I have read cover to cover, model out revenue growth of 70%? I mean, with Nvidia, you're not using any conventional template, are you?
No, you really got to look at their return on capital, which is incredibly strong because they are an intellectual capital rather than a financial capital intensive company. And the growth is phenomenal. The return on capital is phenomenal. They have bought back so much stock that they've pretty much given back all of their equity capital, and they still just continue to grow in value because they continue to innovate, and they are on the cutting edge of AI, which is, we are in a major multi-decade investment cycle here that is going to change everything. And I continue to quote Tom Siebel, who I believe is the one who said that every company, he's the founder of C3 AI, that every company will be an AI company, that every company will use AI in various aspects to optimize their business, to improve productivity, to improve customer interaction. So, and we are just in the beginning stages of this.
Okay, the WACC screen, folks, which is my favorite value add from Mr. Bloomberg and Mr. Secunda, the debt cost is 0.3% is the weight of debt, 99.7% equity. The ROIC is 114% per year. This is through a Stern Stewart net operating profit study as well. Ivan, what's your x-axis on this? If we all learned in school that it's a 7-year dividend discount model, whatever, what's your x-axis on an NVIDIA? How far out can you look?
Well, I mean, you don't have to, you can't just really extrapolate into perpetuity, but they continue, they drive, they've invented the GPU, the graphic processing unit, which is driving all of AI, because what it does, originally the GPU turned digital information into visual information that we saw on the screen. And then they reverse that and they take visual information and turn it into digital information, which is how the large language learning models work.
Yeah, three to
and this will continue to happen faster and faster with higher resolution and more depth, and create these visual pictures that are driving the computer learning process, and also continuing to digest and process more and more information and more data.
Paul, I've never seen this. The CapEx is $3 billion.
Yep.
Cash from operations is $59 billion. 3 divided by 59. I've never seen that.
Yeah, just extraordinary income statement. So, Ivan, I'm sure your clients are asking you, okay, how else do I play this? I can't have all my eggs in this Nvidia basket. If I believe in this AI thing, how else do I play it?
Well, I'm glad you asked that, because two other stocks I happen to like that I think are under the radar AI plays, data center plays, are LandBridge and Texas Pacific Land. They own property and infrastructure that can provide power and water, which is the three things that are needed for a data center. You need space, you need power, and you need water and connectivity. So I think both LandBridge and Texas Pacific Land are really incredible long-term data center and AI plays.
Ivan, you got to come on once every 10 days. Paul, you hear the name TPL, Texas Pacific Land Corporation. Does it sound like a timeshare selling you Corpus Christi or Galveston condos?
But look at this. Great. I've never heard of this company before, but the name actually tells you what they do. Texas Pacific Land Corporation owns tracts of land in Texas. Get this. Previously the property of the Texas and Pacific Railway Company. So you're literally, Ivan, telling me I got to own the land on which this stuff's going to be built, right?
Yes. And first of all, every other day you hear about new investments in data centers. First of all, Microsoft kicked it off this year with increasing their data center and AI CapEx from 50 billion to 80 billion. Then Meta came out with projecting 60 to 65 billion in capital investments in AI and data centers this year. Google, 75 billion. Amazon, 100 billion. And then you saw the launch of Project Stargate, which is starting off with 100 billion and planning on 500 billion over the next 4 years. And then Apple said yesterday that or Monday that they are investing 500 billion in the next 5 in the U.S. between manufacturing, processor development, and AI and data centers. So you're looking at trillions of dollars in capital investments over the next 10 years.
This is Tyler Glover. They got 111 employees. 111. Ivan Feinseth, brilliant on TPL. Ready? 37% per year over the last 10 years. And it's not just about the AI moonshot that we've seen the last 2 years.
Exactly. Ivan, what are some of the other themes that you talk to your clients about here? Because again, if you think about the equity market performance, 2023, 2024, more than 20% gains in the S&P 500. A lot of folks are saying, man, is this market out over its skis? How do you kind of frame opportunities in 25?
Well, we are still in we're in the golden age of equities. The equity market is the place to be. More and more people are investing in stocks, and that will continue. And that's look, you look over time, the best way to create wealth has been in the stock market, whether you go past 10 years, 20 years, 100 years, 200 years, stocks have been the best place. Outperformed pretty much over the long term every other asset class.
So are there sectors, is it a technology weighted outlook there, Ivan? Because that has been one of the areas that have worked so well for investors for a couple of decades now, one could argue.
Since the beginning of time, technology has moved society forward and it will continue to do so. The internet, the cell phone, the tablet, the personal computer, high-speed networks, and now AI, that these trends continue to emerge and then they continue to grow and they drive everything in society forward.
For Global Wall Street this morning, what a treat. Ivan Feinseth with his senior partner, chief investment officer, Tigress Financial Partners, always with a different view. Out of Boston University, which is a good and beautiful thing, probably studied with Zvi Bodhi a few years ago. We welcome you on your morning commute across the nation. on YouTube, our new digital product, YouTube. The YouTube podcast growing each and every day. Really humbled by the international growth there, but also domestically in your office at home. Please, more of Ivan Feinseth right now. Ivan, you were at BU, I assume as V. Bodie in corporate finance. Do the finance textbooks work right now, given the skew to Mag 7?
Well, you know what they say, it's a new economy, but the same old economics still apply. So the same math, the same calculations, while we can do it better and faster using computers and using AI, we can write reports quicker and get more information faster and disseminate it faster. So the way things happen still goes back to the beginning and hasn't changed. Right. The speed at which things happen will continue to accelerate and accelerate and accelerate.
I mean, I got green on the screen, Ivan, but the fact is I got belief and strong buy, MasterCard, Facebook. I call it Facebook Meta. Ivan, forgive me. I call it Facebook. Strong buy Apple. Discuss Apple right now. How do you have a strong buy given the China gloom? How do you do that, Ivan?
Well, first of all, they had a pullback in iPhone sales in China, but they are working on now. They are seeing now a pickup in iPhone sales, and the halo effect that it has to the Apple ecosystem, which drives services sales, will continue to grow. And Apple Intelligence will be also a powerful growth driver for Apple and for Apple services. The Apple has, I think, over 2 billion in an installed user base that, goes through the upgrade cycle, goes through the additional services cycle. And what's fascinating is that Tim Cook said years ago that Apple, as great as the iPhone is and the iPad and all of the Apple products are, Tim Cook said several years ago that Apple's biggest contribution to society will be in healthcare. And they have the fitness app, a lot of healthcare data in their apps and their products. They are just launched new earphones with a heart rate monitor. So there's a lot to do in healthcare and health monitoring and health optimization that I will believe you will see from Apple, which is a whole new category, of growth and the ability to, and then it goes back to AI, which the ability to detect and cure disease, AI to speed up drug discovery. Companies like Illumina, which use AI, use Nvidia's GPUs to map genomes, and the ability for DNA analysis and to do things to do tests that used to take weeks now can take a day. So AI and technology drives every aspect forward.
Ivan, how do you get comfortable with, if you do, the China risk for Apple? For a lot of folks, it's just hard to get their arms around it in this global geopolitics.
Well, it's always going to be a risk somewhere, but geopolitical risk exists, and they do get a lot of headlines. But if you look, they haven't really affected the market. Since the start of the Ukrainian-Russian war, the market really wasn't affected. Even the tragic situation in Israel didn't affect the market. So they exist, and they have to be focused. Geopolitical issues and risks exist, and they have to be taken into consideration. But like I say, no matter what happens in the world, when Tim Cook gets up every morning, the first thing he thinks about is how to sell more iPhones. I say, Mary Barra at GM, when she gets up every morning, the first thing she thinks about is how to sell more cars. And you saw today, GM just announced a 25% dividend increase and an additional $6 billion share repurchase authorization. That comes from confidence in your business, confidence in your business outlook, confidence in your cash flow. And that they will be able to, manage tariff issues, which do affect the auto industry a lot.
Right. I've got to leave it there. Thank you so much for coming on, particularly wisdom on Nvidia and his strong buy, I should point out, on Generous Motors as well. Ivan Feinseth with Tigress this morning. Ashley Carmen out moments ago, definitive on podcasting and all that. The headline is simple. YouTube attracts more than 1 billion podcast viewers every month. The subhead is no, Tom, that's not you.
That's not us. Okay, I thought they were going to get a little shout out from our YouTube friends.
There it is. Just out moments ago. I haven't even read this story.
The reach, Tom, is just extraordinary.
I can't say enough how much I'm learning about this modern digital thing. Michael Barr and I, it's like Michael Barr at 10 o'clock at night tuning in to see if you could get KMOX in St. Louis.
After hanging up my rotary phone, I am like that. Exactly.
And in the party line, do you remember party lines?
I had a party line.
We had party lines.
Had a party line.
My parents were so tight.
Yeah.
I had a party line.
Coat hanger for rabbit ears on the TV.
Exactly. Yeah, the Zenith. Ashley Carmen, thank you so much. We'll talk about that. Right now, with futures up 20, our news in New York City, Michael Barr.
Thank you very much, Tom. Paul, Lisa. Ukrainian President Volodymyr Zelensky said he's received an invitation to meet with President Donald Trump in Washington after negotiators secured a draft agreement giving the U.S. control over half of the war-battered country's natural resources. Zelensky says the deal isn't yet finalized, saying he needed time to study the draft and consult with European allies, but he indicated that the draft is acceptable. Bloomberg's Oliver Crook has more from Berlin.
The reality has been dawning that basically a deal needs to be signed. Trump is not going to move on it. But I think part of what changed is the sort of details of this agreement are sort of seem to be left fairly ambiguous in terms of what they entail. So something that might be broad enough to be considered a win from both sides, from the Ukrainian and the Trump side, while also continuing to get that momentum within this deal. From the European side, this is certainly, I mean, we've talked about this for many months now, right? The wake-up call of Trump. I think that now the Europeans are really finally beginning to wake up.
Bloomberg's Oliver Crook reports European allies are still pushing for security guarantees for Ukraine. House Republicans passed a budget blueprint that will kickstart President Trump's agenda. Now the Senate has to pass this blueprint that includes significant tax cuts and $2 trillion in cuts to federal spending. A close call at Chicago's Midway Airport between a Southwest Airlines Boeing 737 and a business jet. As the Southwest flight from Omaha was touching down, the private jet crossed the runway right in front of it. The Southwest pilots, right as the wheels were about to touch the runway, pushed the throttles up and took off. Air traffic controllers could be heard telling the business jet not to cross the runway, but it did anyway. Retired Marine fighter pilot Colonel Stephen Ganyard.
If the Southwest crew hadn't been so alert and seen this aircraft crossing the runway, this could have been a terrible, terrible tragedy.
The NTSB and FAA are investigating. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
I think most people have seen across the nation the video that you just reported on there, Michael. And, you know, I look at what they're doing with the helicopters now in Washington, where there's all new rules. When the president now takes off in Marine One, they shut down Reagan. Just, you know, I'm not read in on this, folks. Please don't look at this as an authority. But I've never understood the mixing of private planes with big commercial aircraft. I don't have an expert view on this. Paul, your thoughts?
Well, I mean, here in the New York airspace, obviously one of the most congested airspaces in the world. You know, you try to most private jets avoid that. They go to Teterboro. That's a very popular.
Middletown, is it?
They go to Morristown out west in New Jersey, about another 10, 15 miles west. Just to avoid, you know, dealing with New York, LaGuardia, Kennedy, and plus, they make it more expensive to land at those big airports for these private jet owners to discourage them from doing it.
The Southwest Airlines pilots, give them a big high five salute, because I don't know how they missed that private jet that crossed in the middle of the runway. They did. We're talking Captain Sully kind of avoidance, and salute to them.
I used to live on airplanes for Bloomberg when Matt Winkler was building this out, and a pilot once said to me, I think I was flying BA a lot at the time, I make my paycheck 3 times a year.
Right.
And that's what we saw yesterday. We'll see more on this, and we'll continue to report with our great transportation team, George Ferguson, Maria Schauenstein down in Dallas as well. Futures up 22. Nvidia this afternoon with Carol and Tim. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this futures report sponsored by IBKR. Will the U.S. CPI exceed 2.4% in March 2025? You could trade your prediction with IBKR Forecast Trader. The yes recently at 60%. You can buy yes or no and earn $1 if you're right. Go to IBKR.com/forecast. We've got futures advancing. Traders moving on from concerns over weak U.S. consumer confidence with the focus on Nvidia earnings this afternoon. Its shares are up more than 2%. We have Nasdaq futures up 0.4%, S&P futures up 0.3%, Dow futures up 0.1%. The 2-year yield 4.12%. That's up 1 basis point. The yield on the 10-year 4.29%, and that is little changed. Tesla shares, they dropped more than 8% yesterday after news that sales in Europe plunged by almost half in January. This morning, they're on the mend. They're up about nearly 1%. That is your opening bell. That is your Bloomberg Business Report. Tom and Paul.
Okay, Lisa, thanks so much. Out of your chair, Lisa. I mean, go up and have another gluten-free breakfast that I can't stand. Sitting down now, we went to, Gina Martin Adams is here. I mean, she's like pro. I said, who's the one person in radio that knows how to spell Nvidia? Tim showed up from the Carolyn. Tim, what are you going to do with Nvidia this afternoon? What's going to be your focus?
It's totally our focus. We're doing a full roundtable. I mean, starting really at 4:15. We got Ryan Vostelica joining us. We got Red Brown joining us, talking about what's happening to the company. And then we're going off the clock, for the rest of the show. Think about it. What's the most important thing of the quarter? It's Nvidia
never
earnings.
Go off the clock.
You guys never go off the clock?
No, never.
All right, Rich and Ari, you guys listening? You got to go off the clock. Gina Martin Adams, you told us last week on Bloomberg Business Week that this was the report that we're all waiting for.
It is still the report. What I think is very interesting is it's still the report, but it is waning in importance, and that's something to keep in mind. If you go back to what happened in the third quarter, Nvidia beat on top and bottom line. They also increased guidance, and yet the stock only rose 0.5 percentage point in relative performance. And what we've seen quarter after quarter after quarter is Nvidia's peak impact was first quarter of last year. It has slowed every quarter since. I do think it's still very important, particularly given that the trend in the S&P 500 has deteriorated so much over the last week. But it'll be less and less important over time.
Oh, Tim, continue with your questions. Paul and I we'll do our taxes over here.
I see
Tim, please, with Gina.
When I see Gina Martin Adams, she knows this. I can't just not ask her a question, whether it's a technical question or it's a fundamental question.
I'm looking at my 1040. Continue, please.
Okay. They used to say, Gina, over the last few quarters, we get notes from some analysts who said things like, hey, wait a second, Nvidia earnings, this is more important than the Fed. We're not still there?
I don't think we're still there. No, I think we've moved on. It was. It definitely was. We were at a point where Nvidia was the most important thing to watch for the entire market. But that was a year ago, and things have changed a lot. The Fed is still very important and always will be important. Now that our concentration risk is waning a little bit, now that we're starting to see earnings recovery emerge for the other stocks in the index that are not related to the AI trade, Nvidia is less and less important. It's still critical, so I don't want to downplay it too much, but it's less important than it was a year ago when it was kind of the only thing happening for the S&P.
Paul, you want to jump in here in the Tim and Gina show?
Maybe I was going to go up and get a sandwich, but so Gina, I think the way I feel about Nvidia this time is maybe it's not as impactful to the market as maybe it was in the past. It feels like the market participants right now are very on edge. Like this market could turn 10, 15% down, or we could continue to grind higher.
Yeah.
And I could see either side of that discussion taking today at 4 o'clock, 4:30, saying, here we go, one way or the other.
Yeah, it's interesting you say that because the way that I characterized it in a chat with clients this morning is it feels to me like the semiconductors trend is kind of hanging on by its fingernails. It's still there. It very clearly peaked in June of last year. You've got this tale of two stories happening. AMD very, very clearly declining. Nvidia improving in terms of performance still, but it's not the game that it used to be. And there still are a lot of folks that are deeply embedded in the idea that AI is going to continue to lead. We haven't seen a full capitulation there.
Get one more question in, please.
My question is for you, Tom. I'm in my apartment in Brooklyn this morning. I'm making my first flat white of the morning, and I hear you talking to Nathan Hager saying that you don't have any shares of Nvidia. What's going on there?
No, I don't. I have all sorts of strict rules.
You're just triple leverage cash?
I have triple leverage cash. That's it. I can't own financials at all, and I can't trade. And I can't have any of this sexy stuff in the,
who needs all that
the
stuff?
portfolio. What's a flat white?
A little bit of milk, a little bit of coffee. That's it. Espresso machine.
It's like
a latte, like a cortado, just less milk, less than a latte.
I'm having a cup of Sanka. Paul's having the instant Nescafe.
Yep.
You got a
flat white?
Let's come to Brooklyn. We'll make you a real cup of coffee.
Exactly.
That's what we'll do.
And the kids, I'm going to, not that Tim's a kid, but the kids in Brooklyn, the hip people, sitting around a bar, I have no idea what they're drinking.
Oh, nobody
at
works.
A local bar.
Nobody works either.
Yeah, that's a good thing.
You're middle of the day on a Tuesday in South Brooklyn, just walking around.
It's like
Everybody's
the
just walking
land
around.
to work from home.
It's pretty
it?
great.
It is. It's great.
Yeah.
They've got it wired out there.
I'm here.
Okay.
But, that's what
They
I
figured
hear.
it out there.
Okay. Tim Stanovic and Carol Massar, look for that this afternoon on Nvidia. That will be important. Gina Martin, stay with us here. We're going to continue here after we get the market open. What you need to know, futures up 30 have become futures up 18. We've had a little bit of a give back. Some news out of Ukraine, news out of Washington. Mr. Musk will attend the cabinet meeting here in 90 minutes. We're unsure if we will bring that to you. We are sure to give you green on the screen with the VIX in. We had a 20 print, 19.20 right now on an opening VIX. And then fractional moves here in the Dow, in the SPX and NASDAQ as well. Look, I'm trying to do my Lisa Mateo imitation. I'm going down in flames here, Paul. General Motors, I got General Motors going from a 48. It's up, it's a nice pop. It's going like 47 to 49.
Yep.
Just looking up, it's from 60 down to 47. Ivan Feinseth was all over GM.
Yeah, I know. I mean, it's tough for those auto companies. I just don't know how they manage this transition to EVs. That's tough.
Yeah.
Tough thing to ask investors to deal with. Gina Martin, Adam's still with us,
because that was the worst opening bell.
It's green. We're
since
good.
Lisa had the plague or whatever.
That's why we pay Lisa the big money. Gina, Chief Equity Market Strategist at Bloomberg Intelligence here. We're 90% of the way through the earnings season here.
Yeah.
What did we learn? What do we still have question marks about?
Yeah, look, it was a very interesting earnings season. In the end, companies beat expectations materially, and yet the average stock price almost just yawned at the earnings season. So I think what we learned is expectations embedded in stock prices are probably a bit higher than expectations of the bottom-up consensus because companies really struggled to meet those expectations. We're going through our analysis of transcripts at this moment, and I think we're finding a couple of really interesting things. Companies have been talking a little bit about the uncertainty. Certainly tariffs is a huge part of the conversation. Where is this headed is a big part of the conversation. That effectively may be holding back business investment in the short run because there's just not a lot of clarity on that. That could create some downside risk. At the same time, companies are generally feeling a little bit more optimistic after the Fed had eased rates last fall. So you've got a lot of moving parts in the earnings season, or the earnings stream is the way that I think I would describe it. The other thing we learned, unfortunately, is operating margin growth may be peaking.
Oh, now I know
and that
you pay
is something
attention
that,
to that.
that is something that we really pay attention to is operating margins have missed consensus estimates now for 3 consecutive quarters. Now, a lot of this is in the energy sector, which is not necessarily a horrible thing.
Right.
But to the degree we can't continue to see operating margin expansion really drive earnings growth, in particular for tech, discretionary, some of the more cyclical sectors, it could be a bit of a warning sign.
Haven't asked this in ages. Bloomberg Intelligence on the big 3, on autos.
Yeah.
GM with a buyback today.
Yeah, look.
Just the general summary here.
I will defer to the analysts who have much closer knowledge of what's going on in the auto industry. But I think one thing is very, very important to keep in mind. This is one of the most interest rate sensitive sectors in the index, and it is one of the most tariff sensitive sectors in the index. The confluence of those two things, if the Fed is done easing rates and the consumer's kind of still struggling with level of rates and the level of debt, at the same time that you have a tremendous amount of uncertainty about the supply chain, about tariffs, it's a tough time for autos. And that's playing out in stock prices without a doubt. The companies themselves have to come out and shore up confidence. And maybe that's part of this GM maneuvering is we do have capital, we do have cash, we will have cash flow, we feel confident about the outlook because there's just a tremendous amount of uncertainty just pushing that industry toward the bottom of the stack.
Thank you so much. And those comments to Paul there on operating margin, it's really important. We'll have to talk a lot more about that. Gino Martin Adams with us with Bloomberg Intelligence. Now, the 10-year real yield under 1.90%. To me, this is a huge deal. Ian Lingen, I know, over at the Bank of Montreal, writing on it today, 1.89% on the 10-year inflation-adjusted yield. Paul, watching oil, it was 71, it was 70, 68, 89.
Yeah.
With a churn, red and green. Nothing like the futures of the morning. We got a red and green churn to the screen right now, Paul.
And I know, Tom, you wanted to know what's going on here. Bitcoin off another 3% here today, just below $86,000
wow,
per token.
And that's new, 86,000.
Yep. Yep. So that's that risk-off feel. Sure. Yep. So there you go, Bitcoin.
Rebecca Patterson was riveting on it yesterday.
Yes,
talking,
I know.
You know, I put out the Bank of International Settlements paper she cited. And folks, going up, going down, I know nothing about BitDog. I don't, not going to opine on it, to say the least. Right now, red and green on the screen. You need to stay with us. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lise Mateo. We've got stocks battling back after a really rough stretch on Wall Street. Coming ahead of Nvidia earnings after the close right now, Nvidia shares up more than 3%. It's actually leading the Mag 7 this morning. We head over to the 2-year yield, 4.10%. That's up 1 basis point. The yield on the 10-year, 4.29%, and that is little change. NASDAQ leading the charge, up 0.6%, 120 points. S&P 500 up 0.3%. Dow is little change. The Bloomberg Dollar Spot Index up 0.2%. A focus over to the auto industry. Stellantis, it issued a cautious outlook for 2025. Its full-year profits slumped 70%. Its shares are down nearly 6%. Then you have EV startup Lucid. They're off about 7%. It expects to produce 20,000 vehicles this year. That's more than double that last year. But it also announced that its chief executive is leaving the company. General Motors stepping up its program of buybacks, repurchasing $6 billion in shares, also raising its dividend. Its shares are higher this morning. And Tesla battling back. Its shares up more than 1% after dropping by more than 8% yesterday. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. We have a lot of fun with this. Equities, bonds, currencies, commodities, and talking about it. But there is a real tension out there on Wall Street. And to go back to May 23rd of 2006, the entire industry raised up in protest, including me, over the treatment of one analyst by a company. I'm not going to go into the name of the company and all that, doesn't matter. But Rich Greenfield had a bravery of putting out a sell rating on a company, and the management really wasn't happy. And he had the courage of his convictions, as he's had for years. Paul, you mentioned his amazing call on cord cutting. We are thrilled that Rich Greenfield of Lightspeed will darken the door today to give us wisdom. Lightshed, excuse me. I can't pronounce New York Yankees players, and I can't pronounce Lightshed as well. Thank you, Ari, for that.
Pronunciation too.
Yeah, well, that's true. Rich, good morning. Paul Sweeney, why don't you start off with Mr. Greenfield?
Rich, thanks for joining us here again. From my perspective, you were absolutely the first person analyst to really come out and talk about cord cutting and what a risk it posed, fundamental existential risk it posed to all the leading media companies on a global scale. Boy, you were right. And the question now, I think, for a lot of investors is, what does this industry do now? Netflix, okay, I get that. That's a good one. But how about everybody else? How do you think this might evolve over the next couple of years?
It's really hard, Paul. I think the challenge is that when you're trying to live in both worlds, it's difficult. So you've got all of these legacy media companies trying to figure out how they manage the decline of their legacy business while investing in streaming. And the problem is when you're conflicted, you don't put all of your effort. I think if you think back to what Netflix did, right? They basically said our DVD business is going to die. We're basically we're going to stop investing in it. We're going to harvest cash. We're going to put all of the company's focus on the streaming future. That's not what you're seeing out of these media companies, right? Yep. They're all sort of reverting back to, we're in streaming. It was all really exciting during COVID, right? Everyone was stuck at home. Everyone was subscribing to these services, but all of these companies are realizing now streaming is really hard. It's not an easy business to dabble in. And because the difference between streaming and the legacy business that they know of, in the streaming world, both you and Tom, every single day you can make a decision. Do I want this service or not? Do I want to cancel? Do I want to pay for it? It's really easy. And it's point and click to cancel, so-called churn.
Yep.
If you compare that to the linear television world that the three of us grew up in, you signed up for Comcast or you signed up for DirecTV and you were a subscriber for years. I mean, getting that installer to come to your house and set it up and then disconnect, nobody did that, right? It was too complicated. So all of that friction led to a very sticky business model versus now every single day you are fighting for your subscribers, to grow subscribers and to keep your subscribers, and obviously to raise the price so you can make it a better and better business. That takes tons of content. That takes tons of focus, technology. It is a really different business model, a direct-to-consumer business model, whereas historically, right, you didn't deal with Disney or you didn't deal with, Viacom, now called Paramount. Yep. You just dealt with the Comcast and DirecTVs. You didn't have that direct relationship with those companies. And so now these companies are direct-to-consumer. Yep. It is not what they're really good at. And look, the proof is, just to think back to where we've come, 10 years ago when Disney first started talking about the pressures of cord cutting on ESPN, the stock was at $115. That was when Iger made that famous August 2015 conversation or a statement about ESPN's future. And look where Disney's trading right now.
Yep. I think you bring up Disney, and I think, Rich, one of the next big dominoes to fall that will kind of shape this industry is going to be sports, particularly the NFL. Do you believe that, or when do you believe we're going to see significant sports rights, NFL rights, go completely to the streaming platform?
Look, you've seen bits and pieces, right? Thursday Night Football on Amazon. If you think back a few years ago, I think a lot of people, including ourselves, we were a little worried that, the NFL had put their content onto Amazon. Would people tune in? The ratings were substantially lower than they were in the final year of the Fox contract for Thursday Night Football. You look at where they are now, and they're neck and neck. And I think you are, within the next couple of years, I think the ratings on Amazon are going to be well north of where they finished up on Fox. So people are finding sports on streaming. You've seen, obviously, the success of the Christmas Day games. Sure, the reach of games on streaming is, the reach is wider. Right. Has the audience come in the same scale that comes to linear TV? No. But remember, both of you are old enough to remember when Monday Night Football went from ABC over to ESPN, right? That's when that Monday Night Football changed. Ratings took a pretty substantial hit, but obviously built a much bigger business. And over time, people got comfortable and got used to that content being on ESPN.
Rich, I know you're used to the $64 bone-in ribeye steak at Musso and Frank out in L.A. What's your single best idea to profit from the roll-up of our entertainment industry in America?
Look, I think the continued to be the two best ways to play this are focusing on consumer behavior. Where is the consumer? Where is time spent shifting? I always think this is about where is time, right? Like consumers can spend their time. The more time you take, the more engagement you have, the happier your consumer base is, the more they tell their friends about it, the easier it is to grow your subscriber base. And most importantly, the more you can charge them. That sort of, virtuous circle is what drives both Netflix and Spotify. Those have been the two key horses that we've really been behind over the last.
Are they your single best buy? Is Spotify finally turning around and Netflix the juggernaut?
I mean, I think Spotify over the last couple of years, I think has gone, you've seen it go up 4 or 5x. I think the reality is competition. If you think about both companies, I think what Netflix and Spotify both showcase is that they are winning as competition is realizing this is a lot harder. Apple Music has not really been all that aggressive. Amazon Music, no one even talks about anymore.
Right.
TikTok Music shut down. Like there is a lessening of competition. And I think the same thing plays out with Netflix, right? The amount of content. I mean, name the last show anyone was talking about on Disney Plus, Hulu, like what's going on Hulu right now? What's happening on Paramount Plus? Like you can't even name shows that are happening on these networks. And so, the reality is there is something all the time on these platforms to excite consumers. And I think when you think about what Netflix has done in terms of hammering home to you that when you get home at night, when you finish up work and you get to your house, you get into your living room, what's at that moment of truth? Do you choose Netflix? Do you choose linear television? Do you choose Disney Plus, Hulu, Paramount Plus? They want you to win. Like that moment of choice is the most important to win. And if you look at who's winning it right now, it's really two platforms. It's really Netflix on the video side. It's Netflix and YouTube. Like YouTube is a juggernaut that isn't talked about enough.
Rich, I got 15 seconds, please. Are Paul and I, Lisa, are we creators?
You are absolutely creators. Yes. You're one of my favorite creators in the entire world.
Rich, don't be. We got to do this way more often. Rich Greenfield, thank you so much, sir. See you at Musso and Frank for lunch.
Content creator.
Content creator.
Wow.
We're creating here. Subscribe to our content creation. Do that at YouTube on their podcast. Good morning.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. A lift to the market here. Futures were up big, then we opened soggy, and now we got a nice lift to the market, as Paul just mentioned, up 0.6% on Standard & Poor's 500. Joining us now, surveillance name, image, and likeness reporter Emily Grafeo as well. She's getting ready for Wake Forest UVA.
Oh, that'll be a barn burner. 54-46, I predict. Jeez.
We're lucky.
You are brutal. Emily, leverage. I'm making a joke about the triple leveraged all cash run. The triple leveraged Nvidia fund was up 400%, and it's enjoyed going down 60% in 2 cups of coffee. Mm-hmm. How's that leverage thing working out for the Wall Street firms inflicting us with leveraged ETFs?
The firms that are selling these products are making a lot of money because if you're selling an ETF that has leverage, you can charge more. We're still talking about like 100 basis points, so 1%. So it's not much, but it's more than your average ETF. which
like
costs
10 times
basically
more
zero.
than the Vanguard index.
Exactly. But this space has really grown immensely, even in the last year.
Yes.
The funds that go 2x a single stock, so NVDL, that goes 2x Nvidia, MSTU goes 2x Micro Strategy, which apparently is called Strategy now, the Bitcoin company. $2.8 billion in assets a year ago. Now, $14.5 billion in February. And it was about zero, I think, in 2022. So there's a lot of money going into these products that use a lot of leverage.
There's also concern out there, or lots of bets being wagered on inflation with all the talk on tariffs. And I know you put out a story yesterday on the Bloomberg Terminal, you and Yi Zhe, I think, if I get that kind of correct. Inflation hedgers now have an ETF with ultra short tips. I just read it. I have no idea what it means. What does it mean?
This is way less exciting than something that goes 2x
Yes.
Nvidia. But the TIPS ETF, so an inflation-protected ETF, we've actually seen a lot of inflows into funds that are on the shorter end of the Treasury curve. But most of those are funds that have 0 to 5 years. So this new ETF that's coming from FM Investments, it's a boutique ETF issuer.
Boutique.
Yep.
They're going 13 months to zero. So it's not as
T-bills.
liquid of a market of tips, but based on the T-bills.
On the tips, I got it. So this is just an inflation hedge.
It's an inflation hedge. It came out on a day when rates were really moving down quite a bit yesterday. But I guess the idea here is that if you want that inflation hedge, you want to avoid duration risk.
Oh, come on. Is it a way to play the Fed? I mean, that's what this comes down to. Is it a trading vehicle to play the Fed parlor game?
They said that it was somewhere to park your cash and protect it against inflation. So instead of being in a money market fund, you could buy this and protect against inflation.
What have you and Eric are you on speaking terms with Eric Balchunas this week?
I am, yes.
Okay, good. BitDog down to 85,000. What are you learning about how we behave when Bitcoin goes down?
People are leaving, at least Fidelity's funds, Over $700 million has left Fidelity's spot Bitcoin ETF over about the last week. So we'll see if that number gets to $1 billion, because that was a space that people were piling into. And at least for Fidelity's fund, we're seeing investors actually leave that fund in droves.
They're in droves. That's you color it?
Yeah.
Like, get me
6
out.
straight days of outflows, Tom, totaling $757 million.
Okay. In and out. You can put the money in and out really quickly on these things.
Font of wisdom. Emily Graffeo, thank you so much. And your leverage. She's a cross-asset reporter. She's a triple leveraged cross-asset reporter.
Yep.
I don't know, Paul. To me, it's just all the gimmicks that we knew 30 years ago redone.
But just
how do we make more than 50 beeps?
Yeah.
Every meeting, they're on the 42nd floor of a skyscraper going, we're making 10 beeps. How do we make 45 beeps? That's the entire raison d'etre.
Yeah. I mean, at Salomon Brothers, when I started, there were 50 people trading the 30-year Treasury. Now there's like 3. So it's just.
It's what it is. Emily Graffeo, thank you so much. The Dow up 98 this afternoon. Tim and Carol. Tim and Carol.
Tim Stanovic, Carol Masser.
Nvidia up $3 right now, $130 crowns. We've done a very Bon Jovi day. We say good morning to John Bon Jovi and his people running a community restaurant in Red Bank, New Jersey for the poor. Good morning.